Sir, very happy morning to all. So we are doing the chapter profits and gains of business or profession. Sir, as we understood that chapter Pgbp has been classified into 5 categories for our classroom discussion. Number 1 is deduction. Number 2, disallowance. Number 3, procedural aspects. Number 4, presumptive taxation. And last one, 43 series. What and all item that can be debited to P&L account is called as deduction. If these items has been debited to P&L account should be added back is called as disallowance. Sir, if you are traveling through the normal provisions of the Pgbp, then you are compulsory liable to maintain books of accounts. Those books of accounts are subject to do tax audit. That's what 44A and 44. That's what the first 3 slots, right, sir? Sir, if you are not interested to follow this much procedure in Pgbp, then my dear lovable students, for you presumptive taxation route is applicable, which are 44AD, 44ADA and 44AE. Hello, sir. And the miscellaneous 43A, 43B and 43CA. These are the 3 sections which are talking under 43 series. I don't know where to park it, so I have parked in the miscellaneous as 43 series. We are going to start with the book back questions of the ICA study material, which will really teach you how to apply whatever you have studied. This is application number 1 of the Pgbp. Like this only in exam we will be getting the questions. Illustration number 1. Mr. Venus engage in manufacture. Sir, if you are engaged in manufacturing, you are entitled for additional depreciation. In order to enjoy for additional depreciation, assessee should travel through optional tax regime. These are the 2 things strike your brain when you read the word manufacture. Furnishes the following particulars relating to manufacturing unit at Chennai for their end at 31/3/2026. WDV of plant and machinery as on 31/3/2025. That means 24-25. Last year closing is 30 lakh. Depreciation including additional depreciation for the last year is 4.75 lakh. So from 30 lakh, if you reduce 4.75 lakh, you will get the opening WDV. On the opening WDV only, we are liable to provide the depreciation. New machinery purchased on 1/9/2025. You have to check that from 1/9. That means 1/9 means September. So September, October, November, December, January, February, March. That means 7 into 3, 210 days, which is more than. So this is entitled for full rate of depreciation. Am I right, sir? And since this is new plant and machinery, even this is entitled for additional depreciation, provided if the assessee is traveling through the optional tax regime. Number 2 is new plant and machinery purchased on 1/12. 1/12 means only in the month of December. Then December, January, February, March, which will be less than 180 days. Sir, the assessee is entitled for half the rate of depreciation, point number 1. And even the additional depreciation will also be restricted to half the rate. And balance half the rate can be claimed in the succeeding financial year, provided if he is traveling through the optional tax regime. Computer will be 40% on 33/1/2026, which is less than 180 days, not entitled for additional depreciation. Additional information. All the assets were purchased by account pay check. Then consequences of 40A subsection 3 will not be applicable. Am I right? Because if an assessee is incurring any expenditure, sir, other than by way of account pay check, account pay bank draft, electronic clearing system, such other electronic mode as may be prescribed, then my dear lovable students, it should be disallowed under 40A3. If something has been disallowed under 40A3, you are not entitled to claim deduction under section 32. Am I right, sir? So this should be sir, this will not be, this don't have any consequences. Just pass on the information. Am I right? All assets were put to use immediately. That means there is no delay in put to use. Date of purchase should be treated as date of put to use. Sir, tax date of put to use matters. From the date of put to use till year end, you are supposed to see more than 180 days or less than 180 days. New machinery purchased on 1/12. They are talking about this machinery something. And computer have been installed in the office. That means for this new machinery and computer, you are not entitled for additional depreciation. You should be able to download. For 5 things, additional depreciation will not be applicable. Ship or aircraft, second-hand plant and machinery installed in office or place of residence including guest house. Sir, office appliances or road transport vehicle, any plant and machinery for which the entire cost has been allowed as deduction under any other section of the Act. That means for this new machinery and computer, please provide only normal depreciation. Please don't provide. During the year 31/3/2025, that means last year end, 31/3/2025 means 24/25, yeah. A machinery had been purchased on 31/10/2024 for rupees 10 lakh. Additional depreciation besides normal depreciation has been claimed thereon. You tell me, on 31/10/2024 means from 31/10/2024 till 31/3/2025, that is in the last year, whether it is more than 180 days or less than 180 days. So because of the less than 180 days concept, only 10% of the 20%, basically 20% or 50% would have claimed in the last year. Am I right? So for 10 lakh, they are saying, so 10 lakh into 20%, not 2 lakh is the total additional depreciation. In that, only 1 lakh would have been claimed in the last year. So the remaining 50% should be claimed in the current year. That we have to take care. Depreciation rate for machinery may be taken at 15%. If you don't know, also we know that general rate of depreciation for plant and machinery is, assessee has no brought forward business loss or unabsorbed depreciation as on 1/4/2025. Very good boy. That means there is no unabsorbed depreciation and brought forward business loss. There is no hard and fast rule that everyone should have brought forward business loss and unabsorbed depreciation. Compute the depreciation available to the assessee as per the provisions of Income Tax Act and WDV of the different block of asset as on 31/3/2026 if he excised the option out of the shifting out of the default tax regime provided under 115 BAC subsection 1A and he pay tax under the default tax regime is the question. Basically from the deduction chapter, deduction part, section 32 has been separately tested. All the provisions has been tested in one question. It will be a very good revision question. Am I right? Sir, since this is book back question, I will not solve all the question and I will be showing the answer. I will straight away discuss with the answer because all the illustration I have solved and I have matched with the answer. Because now you know all the provisions, you should be able to apply. Here I have to teach you how to apply the provision rather than the provision. Am I right, sir? So computation of WDV of block, you tell me there are two rates of assets are there. One is plant and machinery. Plant and machinery will be depreciated 15% and computer will be depreciated. As we all know that separate rate of depreciation, separate block will be formed. Am I right? Sir, opening WDV, sir. WDV as on 31/3/2025. I know that my year will start from 1/4/2025. Am I right? Last year, opening WDV, already plant and machinery 30 lakh has been given. There is nothing for the what? Computer, my dear lovable students, because computer block has been created during our year only. Sir, less depreciation, including what depreciation? For the previous year, 24/25. Last year I am talking about. I am not talking about the current year, which is already given as 4.75. So from 30, if you reduce 4.75, the opening balance as on 1/4/2025 is 25.25. Am I right, sir? Current year, is there any addition? Yes. Add actual cost of the new asset acquired. There are two plant and machineries are there. New machinery purchased on 1/9/2025 for 10 lakh. New machinery purchased on 1/12/2025 for, and computer has been purchased on 3/1/2026 for 4 lakh. Am I right? So my block value before depreciation will be 25 plus 25 plus 10 plus 8 comes to 43.25. Am I right, sir? And here it will be only 4 lakh. Now, less assets sold, discarded, destroyed during the year. No such information has been given in the, that's why nil. So the WDV as on 31/3/2026 is 43.25 and 4 lakhs. As I already said that, sir, in tax, WDV means before depreciation. Am I right, sir? So this is the WDV before depreciation. On this value only, I am supposed to calculate the what? Okay, fine. Sir, part number 1. If Mr. Venus excised the option out of the shifting out of the what tax regime? Default tax regime. That means if that assessee is saying that I don't want default tax regime, I am going to travel through the, then you are entitled to claim additional depreciation. Sir, in this case, since his income would be computed under the optional tax regime as per the normal provisions of the Act, he would be entitled for normal depreciation and additional depreciation subject to fulfillment of condition. Both depreciation are allowed. Both normal under optional tax regime. Normal depreciation will be allowed and also additional depreciation will be allowed. Known point. Am I right? So I'm calculating the depreciation for 26-27. Come on, my dear lovable students. Two blocks are there. Number one, plant and machinery and computer. Asset put to use for more than how many days? Eligible for 100% depreciation. Calculating, applying the eligible rate. Am I right, sir? And additional depreciation. That means if an asset has been put to use for more than 180 days, you are entitled for full normal depreciation and even for full additional depreciation. Hello? I'm going to calculate the normal depreciation. You tell me what is the block value opening 25.25. Is this 25.25 more than 180 days or less than 180 days? More than 180 days because it is available from 1st of April. It is there in the block till 31st of March. So 25.25 into 15%. Some value will be getting. Am I right? Which comes to 3.79. Am I right? My dear lovable students, sir, there are two additions are there. New plant and machinery. One is more than 180 days and another is less than. For this 10 lakh. Since it has been put to use for more than, you are entitled to claim depreciation at 15%. So 10 lakh into 15%, 1.5 lakhs. Are you clear with the total normal depreciation? Now I am calculating the additional depreciation, man. Sir, first I am taking care of the more than 180 days. You tell me for the opening WDV of 25.25, will I get additional depreciation or will not get additional depreciation? Because additional depreciation is a one-time benefit. I will not get additional depreciation for the opening WDV. Am I right? I would have already claimed in the last year. But my dear lovable students, if some part has not been claimed in the last year because of the 180 days benefit, then the remaining part can be claimed in the current year. Am I right? Sir, in this 10 lakhs is there, 8 lakhs is there. This 10 lakhs is entitled for additional depreciation, that too at 20% because it has been put to use for more than. That's what they are calculating, man. New plant and machinery purchased on 19. 10 lakh into 20% comes to how much lakh? 2 lakh. Right? And my dear lovable students, in the last year, there was one asset worth rupees 10 lakh for which instead of claiming 20% additional depreciation, which is 2 lakh, only 1 lakh has been claimed in the last year because of the 180 days concept. Clarity? The remaining 1 lakh should be claimed in the what year? Current year. That's what balance additional depreciation. In respect of new machinery purchased on 31/10 and put to use for less than 180 days in the immediately preceding previous year. That unclaimed additional depreciation 1 lakh can be claimed in the current year because you are traveling through the optional tax regime. That is a logic. Clear? So subtotal will be 3 lakh man, which is 2 lakh plus 1 lakh comes to 3 lakh. Can I proceed? That's it. I have taken care of the asset which has been put to use for more than. In that I have calculated normal depreciation and I have calculated additional depreciation. Right? Sir, number 2 man, asset put to use for less than. Then it is entitled for only half the rate of depreciation, applying the normal rate. Can I calculate the normal depreciation? Look at here, man, in the block. 25.25, more than 180 days, less than 180 days. 10 lakh, more than 180 days, less than 1 days. 8 lakh, more than 180 days, less than 1 days. That means for that 8 lakh, you are entitled to claim normal depreciation of only 7.5% because normal rate is 15%. 15 into 50% come to 7.5. So 8 lakh into 7.5 comes to 0.6 lakhs. Am I right, sir? Let me ask you a question, man. This I am calculating less than 180 days. Sir, in that block comes to an end. I am moving to the next block. Is the computer more than 180 days, less than 180 days? The general rate of computer is 40%. 40 into 50% comes to. So 40, sir, 4 lakh into 20% comes to 0.8 is the amount of depreciation for the computer. Am I right? Sir, now I am talking about less than 180 days. Sir, give me answers. Sir, for this 25.25, will I get additional depreciation? No, sir. Actually, this include, sir, some additional depreciation which has been unclaimed, which is unclaimed in the last year. So, in the current year, it will mandatorily be more than 180 days. That's why in more than 180 days category, that unclaimed has been claimed. Next one. For this 10 lakh, is normal depreciation allowed? Yes, sir. Sir, since it is more than 180 days, and sir, additional depreciation also claimed then and there itself. For this 8 lakh, only normal depreciation is allowed because it has been installed in office, not entitled for additional depreciation. Sir, for this 4 lakh, only entitled for normal depreciation. Since the computer has been installed in office, not entitled for. That means that's it with regard to the less than 180 days. Only that particular item is there. So the subtotal will be 0.6 and 0.8. Am I right? So here 5.29 is the normal depreciation for more than 180 days. 3 is the additional depreciation for more than 180 days. So 5.29 plus 3, 8.29 plus 0.6 comes to 8.89 is the total depreciation under section 32. Clarity? Here man, for the computer, there is no more than 180 days, only less than 180 days, and that too only normal depreciation. The answer will be 0.8. That's it with regard to the depreciation. This notes and all, we have to read it, man. We'll be reading together. Sir, now, come on, man. As per 32 subsection 1 clause 2a. What is clause 2a? Additional depreciation. Additional depreciation is allowable in case of new machinery or plant acquired and installed after 31/3/2005 by any SSE engaged inter alia in the business of manufacture or production of any article or thing at the rate of 20% of the actual cost of such plant and machinery. In exam, you don't worry. You write, in order to claim additional depreciation, SSE has to satisfy two conditions. SSE should invest in new plant and machinery, and SSE should be engaged in the production or manufacture of any article or thing or generation or distribution of power. This point you write. My dear lovable students, our additional depreciation shall not be allowed in respect of any office appliances or road transport vehicle, any machinery or plant installed inter alia in the office premises. Why only 2 points? We can write all the 5 points. Ship or aircraft, second-hand plant or machinery. Plant or machinery installed in office or place of residence including guest house, office appliance or road transport vehicle, any plant or machinery for which the entire cost has been allowed as a. In view of the above provision, additional depreciation cannot be claimed in respect of machinery purchased on 1/1/2025 installed in, computer purchased on 31/1/2026 installed in. Note number 2, I am moving. Are you able to, sir, match up revision of the depreciation? Balance additional depreciation at 10% on the new plant and machinery acquired and put to use for less than 180 days in the year of acquisition, that is the last year, which has not been allowed in that year, shall be allowed in the immediately succeeding previous year. That is a provision as per section 32. Am I right? In this case, the balance additional depreciation of how much percent? 10%, which is nothing but 1 lakh, because 10 lakh into 10% in respect of new plant and machinery which has been purchased during last year, that is 24, and put to use for less than 180 days in that year can be claimed in previous year 25/26 being immediately succeeding previous year. That's it. This is how you have to calculate the depreciation under section 32 if the assessee is traveling through the optional tax regime. Every point are you able to, sir, connect? I'm moving the second part, man. If mean a space tax under the default tax regime. If he is traveling through the default tax regime, don't check the applicability of additional depreciation at all. Am I right? And that too, even the carry forward additional depreciation of 1 lakh should also be swaha. Should also be. That means in this case, under the default tax regime, under 115 BAC, he would be entitled only for normal depreciation, but not for additional depreciation. So computation of depreciation for assessment year 26-27, same format. Asset put to use for more than eligible for 100% depreciation, calculated applying the eligible rate of what depreciation. Here I have removed the word additional depreciation, but there in calculation I was having normal depreciation and additional. So can I talk with normal depreciation? You tell me, sir, 25.25 lakhs was more than 180 days, into 15%, same 3.79. Are you all ready with me? New plant and machinery, that 10 lakh rupees is been put to use for more than 180 days. 10 lakh rupees into 15% comes to 1.5, which is 5.29. If you check here 5.29, it is exactly matching. Hello, sir. Because this is only normal depreciation, I have not talked anything about. Under the default tax regime, there is no question of that calculation has been skipped. I am moving into asset put to use for less than 180 days, eligible for 50% depreciation, calculated applying the eligible rate of what depreciation? Normal depreciation. Now I am going to calculate the normal depreciation for asset which has been put to use for less than 180 days. Am I right? Is there any asset? 2 assets are there. Sir, new machinery is there. The value is how much lakh? 8 lakh. 8 lakh into 7.5% comes to 0.6. And for computer, 4 lakh is there. 4 lakh into 20% comes to 0.8. So this is a subtotal. Sir, there is no question of additional depreciation. There is no question of carry forward additional depreciation. Am I right? So the total depreciation will only be 5.89 lakhs and 0.8 lakhs, in the sense means under the default tax regime, you are not entitled to claim additional depreciation. Under the optional tax regime, only you are entitled to claim. That's it. With regard to illustration number 1, my dear lovable students, are you able to connect each and every point? This is how a depreciation computation question will be asked or tested in exam. After my discussion, as you all know that you have to sit and solve all these questions by your own. At that time, do the question by your own. Do the workings by your own. Then only you will get a good flow in computation of depreciation. I'm moving into illustration number 2. Even illustration number 2 is also from the area of section 32, depreciation. Mr. Abhimanyu is engaged in the business of generation and distribution of electric power. Sir, even though you are entitled in electric power, you are entitled to claim additional depreciation. He opt to claim depreciation on WDV for income tax purpose. Super. Because only for power sector undertaking they are having the option either to choose the SLM method or WDV method. This guy, he opt to claim depreciation on WDV method. That means terminal depreciation concept, balancing charge concept, IAS concept, individual asset system concept will not be applicable. Only block system concept will be applicable. Here, power sector undertaking will be treated as if the other normal assessee only. Because he also opt to travel through the WD. From the following details, compute the depreciation allowable as per provisions of Income Tax Act. For assessment year 26-27, assuming he has exercised the option of shifting out of the default tax regime. That means he is going to travel through the optional tax regime. That means if he is entitled to claim additional depreciation, he can claim. If any additional depreciation has been short claimed in the last year because of the 180 days concept, that additional depreciation can be claimed in the WDV of the block as on 31/3/2025 is 50 lakhs. That means last year WDV is 50 lakh. Depreciation for 24-25 is 7.5 lakhs. That means from 50 lakh, if we reduce 7.5 lakhs, we will be getting the opening WDV of 42.5 lakhs. Sir, Kandipa, that 42.5 lakhs will be more than 180 days. For that, you are supposed to provide full rate of normal depreciation. There is no question of additional depreciation at all. Because additional depreciation is a one-time benefit. All these should run in your brain. New machinery purchased on 12/10/2025. First of all, it is new. It is entitled for additional depreciation because assessee is traveling through the optional tax regime. 12/10. So 12/10 till 31st of March. You tell me more than 180 days, less than 180 days. Sir, 12/10. 10 means which month? So October, November, December, January, February, March, right? Sir, October, 12/10 means October how many days? 31 minus 10, only 21 days has been booked in 12. 31 minus 12, 19 days has been booked in October. November, how many days? 30 days. So plus 30. December, 31. January again, 31. February, 28. And March, 31. Which come to only 170 days, which is less than 180 days. Am I right? So this is less than 180 days, my dear lovable students. New machinery or machinery imported from Colombo on 12/4/2025. On 12th of April itself, machinery has been imported. This machine has been used only in Colombo earlier, and assessee is the first user in India. This asset has not been used in India at all. Hello, sir. Sir, in order to claim what depreciation? Additional depreciation. Asset should not be second-hand plant and machinery. Am I right? Is this second-hand plant and machinery? No, sir. Sir, this is new plant and machinery. Yeah. This is new plant and machinery. Yeah. This is, sir, this machine has been used only in Colombo. That means this has been used in Colombo. This is a second-hand plant and machinery. Hello, sir. New computer installed in generation wing unit. Generation wing unit means not office. Generation wing unit what? Not office. That means computer is entitled for additional depreciation. All the assets were purchased by account pay check. That means disturbance of 48 subsection 3 is not there. You are entitled to claim depreciation under section 32. Am I right, sir? So computation of depreciation under section 32 is the discussion. Come on, sir. Normal depreciation. Can we be with me and enjoy the discussion? Sir, first one, depreciation at the rate of how much percent? 15%. On 51,50,000 being machinery put to use for more than 180 days. Nothing, man. Sir, look at the question, man. What is the opening WDV? 50 lakhs. Take your calculator. 50 lakhs. Sir, 50 lakhs is the opening WDV. Sir, before depreciation of the last year. What is the last year depreciation? Minus 7,50,000. So 42,50,000. That's what 50 lakh minus depreciation 7,50,000. Accepting. Sir, add. Is there any other machinery purchased? New machinery purchased on 12/10. Sir, which is less than 180 days. This I can't add because now I am calculating more than 180 days. Am I right? But machinery imported from Colombo on 12/4. From 12/4 to 31st March. More than 180 days. So plus how much lakh? 9 lakh. What? Plus 9 lakh. You will be getting 51,50,000. Am I right? So 51,50,000 is the value of the plant and machinery which has been put to use for more than. So 51,50,000 into 15% comes to 7,72,500 will be the amount of depreciation. Pakka? Whereas, my dear lovable students, this 10 lakh machinery has been put to use for less than 180 days. That means for that 10 lakh, you are entitled to claim of the rate of depreciation. So 10 lakh into 7.5% come to. So the total depreciation available to asset, so normal depreciation available to asset are 8,47,500. With this 8,47,500 comprises of both normal depreciation for the asset put to use more than 180 days. Sir, normal depreciation for asset put to use less than 180 days. I have taken care of the normal depreciation for the plant and machinery. Am I right? One more item is there called as what? Depreciation for computer. Am I right? Sir, is the computer is more than 180 days? Less than 180 days? More than 180 days. 15th of July itself it is put to use. From 15th of July till 31st of March. It will be what? More than 180 days. Sir, so 2 lakh into 40% comes to 80,000. So the total normal depreciation, my dear lovable students, will be 9,27,500. This is the total normal depreciation for first block of plant and machinery. This is the total normal depreciation for computer at the rate of 40%. For the concern as a whole, total normal depreciation is this much. Clarity. Now I am going to talk about what depreciation. Look at here, man. Additional depreciation. This is new, but which has been put to use less than 180 days. You are not entitled for 20%. You are entitled for only. So 10 lakh into 10% comes to 1 lakh. So that 1 lakh can be claimed in the current year. You have to write a note. The balance 1 lakh can be claimed in the next year, subsequent year. Am I right? But in next year, Timur Budche, if you decided to travel through the default tax regime, that 1 lakh will be swaha. Hello, sir. The next one, man. Even computer has been installed in generation wing. That means not office, in the production place. You are entitled depreciation for how much lakh? 2 lakh at the rate of, sir, this is more than how many days? So entire 20% can be claimed. So 2 lakh into 20%, 40,000. That's what 40,000. Sir, Colombo machinery, sare, that is second hand planter machinery, sare. Sir, question, read it, man. Machinery importer from Colombo. This machinery has been used only in what? Colombo. Earlier, and Assassi is the first user in India. I will tell you where students will get confused. There is a section called as section 35AD. 35AD specified business. There one condition is saying that the business should not be by split up of the old business. And 100% of the plant and machinery should be new plant and machinery. There 20% of the plant and machinery can be second hand plant and machinery. For that 20% explanation, if any asset has been situated outside India and which has been brought to India for the first time, for which depreciation has been not claimed in India, will be treated as new plant and machinery for the purpose of 35AD. If you drag that explanation here, you will become a KD. Sir, additional depreciation specifically saying that, what man? Second hand plant and machinery is not allowed. This is like, no, you are saying that I got only married in Colombo. I have not married in India. My dear lovable students, sir, you have already married. This is your second marriage only. Sir, this asset has been used already outside India. Sir, for this additional depreciation will not be allowed. Can I proceed? So the depreciation on plant and machinery will be total plus additional, normal plus additional, 10,67,500. You have to write note like this, man. If you are not writing note, you will not get the marks. Sir, how to write the note, sir? Whatever you know, your English, you write. Don't write to, sir, exact words. Anyway, that is not possible. Mr. Abhimanyu is eligible for additional depreciation since he has exercised the option of shifting out of the default tax regime provided under 115 BAC. Everyone knows. Benefit of additional depreciation is available to new plant and machinery acquired and installed in power sector undertaking. In order to enjoy additional depreciation under 32 subsection 1 class 2A, assessee should satisfy two conditions. Assessee should invest in new plant and machinery, and assessee should be engaged in the production or manufacture of any article or thing or generation or distribution of power. This guy is engaged in the generation and distribution of power, so he is entitled to claim additional depreciation. Connect avada. Accordingly, additional depreciation is allowable in case of any new machinery or plant acquired and installed by assessee engaged in the business of generation and distribution of power at the rate of 20% on the actual cost of such plant and machinery. Therefore, new computer installed in generation wing unit eligible for additional depreciation at the rate of, since the new machinery was purchased only on 12/10, it was put to use for less than 180 days during the previous year, and only 10% is allowable as additional depreciation in our assessment year. The balance additional depreciation would be allowed in the next year. Don't go and say that next year if you travel through. Okay. However, additional depreciation shall not be allowed in respect of any machinery or plant before its installation by assessee was used either in India or outside India by any other person. Therefore, additional depreciation is not allowable in respect of imported machinery since it was used in Colombo before its installation by the assessee. Are you able to connect section 32? Section 32 is depreciation. Sir, provisions is not important. Application of the provisions are important. In order to apply the provision, provisions are important. Are you all really with me? This interconnectivity is called as direct tax. This interconnectivity is called as subject tax, whether it is DT or IDT. This confusion is not there in accounts because accounts there is no provision at all. There you should understand what a chapter is all about. Am I right? But here, certain students will lifelong study provision. Fantastic. When they take question, they don't know how to apply. Certain students will only apply. Sir, they will write their own provision. Then also big problem. First, you should know the provision. Then you should know how to apply the provision. I'm moving into illustration number 3. Examine with reason allowability of the following expenses incurred by Mr. Manav, a wholesale dealer of commodities under the Income Tax Act, while computing profits and gains of business or profession. If he has exercised the option of shifting out of the default tax regime, that means this guy is going to travel through the optional tax regime. So you have to say that whether this will be allowed as deduction or not. That means 30 to 38 full package they are going to test. They will say some line. You have to first, sir, map it to the section number and you have to check whether the conditions has been satisfied or not. Right. Construction of school building in compliance with CSR activity amounting to 5,60,000. CSR activity will not be allowed as a deduction as per section 37. Am I right? That means this amount cannot be claimed as a, sir, look at here, man. Construction of school building compliance with CSR activity under section 37. Only expenditure, 37 subsection 1. Only expenditure not being in the nature of capital expenditure. Expenditure should not be capital in nature. Sir, or personal expenditure and are not covered under 30 to 36. And it should be incurred wholly and exclusively for the purpose of business or profession is allowed as deduction while computing the business income. My dear lovable students, in order to claim deduction under section 37, 7 conditions should be satisfied. Expenditure should not be covered under 32, 36. Expenditure should not be capital in nature. Expenditure should be revenue in nature. Expenditure should not be personal in nature. Expenditure should be incurred wholly and exclusively for the purpose of business or profession. Expenditure should not be infraction of law. Expenditure should not be CSR activity. We discussed. However, any expenditure incurred by an assessee on the activity relating to CSR referred in section 135 of the J. Ma'am's Act shall not be deemed to have been incurred for the purpose of business and hence shall not be allowed as deduction under section 37. As per section 135 of the J. Ma'am's Act, if you are incurring any expenditure, then those expenditure will not be treated as expenditure incurred for the purpose of business or profession. Accordingly, the amount of 5,60,000 incurred by Mr. Manav towards construction of school building in compliance with CSR activity shall not be allowed as deduction under section 37. Are you all really with me? So, construction of school building in compliance with CSR activity amounting to 5,60,000 cannot be claimed as deduction under 37 subsection 1. Am I right? Purchase of building for the purpose of specified business of setting up and operating a warehousing facility for storage of food grain amounting to what? 4,50,000. Which section is striking your brain? 35 AD. 14 specified business are there. Whether warehousing facility for food grain is a specified business? Sir, warehousing facility, setting up and operating a warehousing facility for storage of food grain. Sir, what is the name? Warehousing facility for what produce? Food grains are agriculture produce, no? Yes, sir. Then what is the problem? Already we have done one question also. Then, my dear lovable students, this is 100% of the capital expenditure can be claimed as deduction under NIAD. 35 AD will not be applicable to goodwill, instrument, land. This is not goodwill. This is not instrument. This is not land. This is building. Am I right? But in order to enjoy 35 AD, assessee should travel through. Yes, that's why this guy is traveling through optional tax regime. Hello, sir. Sir, purchase of building for setting up and operating a warehousing facility for storage of food grain. Mr. Manav will be eligible for investment linked tax deduction under 35 AD since he excised the option of shifting out of the default tax regime provided under 115 BAC subsection 1A. When we discuss all this, whether you are understanding this or not, after discussion you will understand one thing. You have to study that deductions very well. If that field comes successful, deduction under 35 AD would be 100% of 4,50,000 being the amount invested in the purchase of building for setting up and operating a warehousing facility for storage of food grain which commenced operation on or after 1st April 2009. That cutoff dates were there, no? In this case, therefore, the deduction under 35 AD while computing business income of such specified business would be 4,50,000 if Manav opt for 35 AD. Interest on loan to Mr. X, a resident, rupees 50,000, on which tax has not been deducted. Super. In the sense means, my dear lovable students, you paid an amount to a resident on which TDS is liable to be deducted. No TDS has been deducted. Then 30% of the expenditure debited to P&L account should be as per 40A clause 1A. Are you all really with me? Non-resident na clause 1. Resident na 1A. Hello. The sales for the previous year 24-25, last year sales they are giving is 202 crores. Sir, in case of an individual or HUF, sir, in the immediately preceding previous year, if the turnover does not exceed 1 crore in case of business or 50 lakhs in case of profession, hijacker provision will not be applicable. Since in the immediately preceding previous year, business turnover exceeds 1 crore, hijacker benefit will not be applicable. He is liable to deduct TDS. No TDS has been deducted. 30% of the expense debited to P&L account should be back. Mr. X has not paid the tax, if any, on such interest. That means the payee is not a law-abiding payee. Unmiliye the payee is a pisas. He has not paid the tax. Are you all really with me? That means current year disallowance is mandatory. Are you all really with me? That's what they are saying. Interest on loan paid to Mr. X, resident, 50,000, on which tax has not been. As per section 194A, because 194A, interest other than interest on securities. Already we discussed. Section 192, TDS on salary. 192, accumulator balance in Provident Fund account. This is not 192A, 194A. Interest other than interest on securities. Section 193, interest on security. 194, dividend. 194A, interest other than interest on securities. 194K, income in respect of units. Immediately after that slot, I said that right 3 times. Then it will be with you. Otherwise, it will be in the book. Come on. As per section 194A, Mr. Manav, being an individual, is required to deduct tax at source on the amount of interest on loan paid to Mr. X, since his turnover during the previous year 24-25 exceeds 100 lakhs. Therefore, 15,000 being 30% of 50,000 would be disallowed under 40A clause 1A. While computing the business income of Manav for non-deduction of tax at source under 194A, an interest of rupees 50,000 paid by it to Mr. X. The balance 35,000 would be allowed as deduction under 36 subsection 1 class 3, interest on what capital? Assuming that the amount was borrowed for the purpose of the business or profession. Look, all the technical sections I have completed. In a sense means that's what I can do in the class. Look, sir, this provision, since in the turnover, in case of an individual or HUF, in the immediately preceding previous year, if the turnover does not exceed 1 crore in case of business or 50 lakhs in case of profession, he is not liable to deduct TDS under hijacker. In this case, 1 crore has exceeded. Hijacker benefit will not be applicable. Pakka? So, okay, this you would have understood. 30% disallowance under 40A, 1A. Am I right, sir? 194A, TDS provision. Am I right, sir? 36 subsection 1 clause 3, interest on what capital? That means 100% discussion. That's what holistic discussion. If we don't make that much depth, when you come here, somewhere you have to compromise. In the sense means, this section I know, that section I don't know. That section I know, that section I don't know. That will take, sir, 2 or 3 attempts to understand the holistic approach. That's the wrong way of learning. Let me move into the 4th requirement. Sir, commodity transaction tax paid 20,000, sale of bullion. In a sense means, sir, CTT, STT are there. 36 subsection 1 class 15 for CTT, 36 subsection 1 class 16 for 15 for CTT, 60 STT and CTT 16 commodity transaction tax. Am I right? That can be debited to what account? P&L account. Sir, commodity transaction tax of 20,000 paid on sale of bullion. Sir, commodity transaction tax paid in respect of taxable commodity transaction entered into the course of business during the previous year is allowed as a provided, this is the only condition I already said, income arising from such taxable commodity transaction is included under the head what? Pgbp. From that commodity, are you showing the income? If you are showing the income to the credit side of the P&L account, then whatever commodity transaction tax you have paid can be debited to what account? Taking the income from this commodity transaction is included while computing the business income of Manav. Commodity transaction tax of 20,000 paid is allowable as deduction under 36 subsection 1 clause 16. For example, I'll be buying and selling certain commodity. For example, calculator is a commodity like that. Jewelry I'll be buying and selling. Bullion means biscuits, gold biscuits, sir, will be buying and selling. At that time, sir, I can buy gold bullion today and I can sell gold bullion after 1 or 2 months. Then obviously the price would have been increased. So that I will be getting some profit. Whether that profit I'm showing under PGBP or capital gain. If I'm showing that profit under PGBP, it would have been credited to what account? P&L account. Then that commodity transaction tax can be debited to. That's what, man. The 4 things we have done. Allowability of the expenses incurred by Manav, a wholesale dealer in commodity, while computing PGBP has been discussed. That means in one question, we are talking about deduction, disallowance, procedural aspects, everything. We are slowly coming to the, sir, application of the profits and gains of business or profession. Illustration number 4 is the target. Sir, we are having 6, sir, transactions are there. You try to say what is the fate of the transaction. Examine with reason, following subdivision, whether the following statement are true or false. At least you say true or false, having regard to the provisions of the income tax. Case number 1. For a dealer in shares and securities. For example, my business is selling shares and securities. Security transaction tax paid in recognized stock exchange is a permissible business expenditure. True, sir. That can be debited to under 36 subsection 1 class 15. Am I right? True. Super. 36 subsection 1 class 15 allows a deduction of the amount of STT paid by assessee in respect of taxable security entered into the course of business during the previous year as deduction from business income of dealer in shares and, sir, where a person follow mercantile system of accounting. What is mercantile? Accrual system of accounting, not cash system. Expenditure of 25,000 has been allowed on accrual basis. That means 25,000 has been debited to P&L account. In a later year, in respect of said expenditure, assessee makes the payment of 25,000 through a crossed check. 25,000 can be the PGBP under 40A subsection 3A in the year of payment. Nothing, man. Last year, I claimed some expenditure as a deduction on accrual basis. In future year, I am not paying those payment through account pay check, account pay bank draft, electronic clearing system, such as electronic mode as may be prescribed. I am making the payment by cash. Then it will be treated as income in the year of payment. Rule clear? As per this section only, it will be treated as income. 40A subsection 3A. We discussed 3. 48 2 related party transaction. 48 3 cash payment exceeding 10,000 or 35,000 as the case may be. 48 7 provision for gratuity. 48 9 contribution to unrecognized one. Am I right? This is 48.3A, deemed income. What income? In future, if you are not paying that by account pay check, account pay bank draft, electronic clearing system, such an electronic mode as may be, it will be treated as deemed income under 40A subsection 3A. What they are saying, sir, then 25,000 can be Pgbp under 48 3A in the year of payment. Is the statement true? Is that statement true? Yes, sir. The statement is what? True. Sir, as per 48 3A, which is what income pa? Deemed income. In case of an assessee following mercantile system of accounting, if an expenditure has been allowed as deduction in any previous year, on what basis? And payment exceeding 10,000 has been made in the subsequent year otherwise than by account pay check, account pay bank draft, use of electronic clearing system or such other electronic mode as may be prescribed, then the payment so made shall be deemed to be the income of subsequent year in which the payment has been made. Comfortable. Moving to the third one. It is mandatory to provide depreciation under section 32 of the Income Tax Act while computing income under the head Pgbp. Sir, if you are having asset, depreciation is mandatory, no? Yes, sir. So it has to be mandatory to provide what? Depreciation. Sir, answer is what? True. According to explanation 5 to 32, what is section 32? Depreciation. Allowance of depreciation is mandatory. Therefore, depreciation has to be provided mandatorily while calculating income from profits and gains of business or whether or not assessee has claimed the same while computing total income. For example, if assessee forgot to debit the depreciation in the P&L account, still income tax department have to calculate the depreciation and debit that to the P&L account, then only PGP should be computed. But bad debt, if you debit to P&L account, only bad debt will be allowed as a reduction. That's the one of the condition to claim the bad debt. In order to claim bad debt as a deduction, sir, write-off in the books of accounts are mandatory. But every businessman will debit the depreciation to the what account? P&L account. There is no doubt. But if they miss to debit the P&L, then department mandatory supposed to debit. Without debiting depreciation, you are not supposed to close the calculation of the profits and gains of business or profession. Clarity? I'm moving to the next one, man. The Medi-claim premium paid to GIC, General Insurance Company, by Mr. Sir Lokesh for his employee by an account pay check on 27/12/2025 is deductible expenditure under 36. For example, there was one employer called as Mokesh. What that Mokesh, Lokesha, Mokesha, Lomesha, whatever it may be, that doesn't matter. Look, man, sir, that L also, light also starting with L. I leave it. So that is more than enough. Sir, that Lokesh is paying some insurance, medical insurance premium for his what? Employee, medical insurance. My dear lovable students, it's a expenditure has been incurred by the, if any employer is incurring an expenditure for the health of the employee, 36 subsection 1 clause 1B, B stands for biceps, right? So can that be debited to P&L account? Yes. 36 subsection 1 clause 1B, provide deduction in respect of premium paid by employer to keep in force an insurance on the health of his employee under a scheme framed in this behalf by Sir General Insurance Company or any other insurance. Whatever we discussed is coming here. We already, all this has been discussed in section 36. Pakka structural discussion we have made. The medical insurance premium can be paid by any mode other than cash to be eligible for deduction under 36 subsection 1 clause 1B. Under 35 D, D, A, V, R, S. Amortization of expenditure under eligible VRS at the time of retirement alone can be done. 100% of the expenditure should be debited to P&L account, they are saying. False. It has to be deferred over a period of. So the statement given is, expenditure incurred in making payment to employee in connection with his voluntary retirement, either in the year of retirement or in any subsequent year, will be entitled to deduction in 5 equal annual installment beginning from the year in which, sir, each payment is made to the employee. Am I right? Sir, an individual engage in trading activities and exercising the option of shifting out of the default tax regime provided under 115 BAC can claim additional depreciation in respect of new plan acquired and installed in trading concern, where the increase in value of such plan as compared to the approved base year is more than 10%. Sir, in order to enjoy additional depreciation, you should sir, invest in new plant and machinery. And assessee should be engaged in the production or manufacture of any article or thing. What this guy is doing? Trading. That means purchasing and selling. He is not manufacturing. Then you are not entitled for. Sir, I am traveling through optional tax regime, sir. Sir, still there is no what depreciation. False is the answer, man. Additional depreciation can be claimed only in respect of eligible plant and machinery acquired and installed by an assessee engaged in the business of manufacture or production of any article or thing, or in the business of generation or transmission or distribution of power. In this case, individual is engaged in trading activity. New plant has been acquired and installed in a dash concern. Hence, he will not be entitled to claim additional depreciation under 32 subsection 1 class 2A, even though he has exercised the option of shifting out of the default tax regime under 115 BAC. Clarity. That's it with regard to question number. I'm moving into question number 5. Examine with reason allowability of the following expense under Income Tax Act while computing the business or profession. True or false? You have to say that whether this amount can be debited to P&L account or not. Right, sir? Tell me. Sir, provision made on the basis of actuarial valuation for payment of gratuity rupees how much lakh? 5 lakh. Provision for gratuity should be enna back. Added back 40A subsection 7. However, no payment on account of gratuity was made before date of filing return. Only provision has been added back. Sir, this will not be allowed as a deduction. That's what? As per 40A subsection 7. No deduction is allowed in computing business income in respect of any provision made by the assessee in his books of accounts for the payment of gratuity to his employee, except in 2 cases. In these 2 cases, that provision will be allowed. Where any provision is made for the purpose of payment of some by way of contribution towards a approved gratuity fund. I created provision. Whatever provision I created, that amount has been paid to approved gratuity fund. Then 36 subsection 1 class 5, you can claim it as a reduction. I already said 10 gratuity divided by 2, 5 will come. Approved gratuity fund. Employer can contribute to approved gratuity fund and all. At that time also you laughed. 10 gratuity divided by 2 and all. Now you are not able to recall. Come on. Sir, when any provision is made for the purpose of making any payment on account of gratuity that has become payable during the previous year, current year I made the contribution. Therefore, in the present case, provision made on the basis of what valuation? For payment of gratuity has to be disallowed under 40A subsection 7 since no payment has been actually made on account of gratuity. What is our understanding? Any provision for gratuity debited to P&L account should be enna back. That's it. It is assumed that such provision is not for the purpose of contribution towards approved gratuity fund because question did not say that any payment has been made. Able to apply? Purchase of oil seeds of rupees 50,000 in cash from a farmer on a banking day. Oil seeds is agricultural producer. Rule 6DD, exception to 48 subsection 3, allowable as deduction. Sir, as per Rule 6DD, so we should know what are the items covered in Rule 6DD. In that, agriculture produce, sir, apiculture, horticulture, pisciculture. At that time and all, we laughed. Come on. In case payment is made for purchase of agriculture produce directly to the cultivator, grower, producer of such agriculture produce, no disallowance under 48.3 is attracted, even though cash paid for the expense exceed. Therefore, in the case, disallowance under 48.3 is not attracted since cash payment for purchase of oil seeds is made directly to the... Can I come to the next one? Tax on non-monetary perquisite provided to employee 20,000. Employer is having the option to pay tax on non-monetary perquisite. And that tax on non-monetary perquisite debited to what account? Should be enna back. Will not be allowed as a reduction under 40 small a clause 5. Hello, sir. Come on, sir. Sir, look at here, man. Income tax of 20,000 paid by employer in respect of non-monetary perquisite provided by its employee is exempt in the hands of the employee under 1010cc. Employee, it will not be treated as perquisite. It will be fully exempt under 1010cc. That is from the angle of the employee salary chapter. Come on. As per 40A clause 5, such income tax paid by employer is not deductible while computing the business income. Am I right, sir? I'm moving to the next one. Payment of 50,000 by using credit card for fire insurance. I paid fire insurance, pa. For that credit card I made. Sir, allowed, sir. Last table, like debit card, credit card, letter of credit, sir, adjustment entry, All those things. Rule number 6D is there. Okay, sir. Allowable as a deduction. Payment for fire insurance is allowable as deduction under 36. Since payment is made by credit card, which is prescribed electronic mode, disallowance under 48(3) is not attracted in this case. That's it with regard to case number 4. Am I right, sir? Salary payment of 10 lakh to Mr. X outside India. That means to what resident? Without deduction of tax, assuming Mr. X has not paid tax on such salary income. That means if you are making any salary to a non-resident on which TDS is liable to be deducted, no TDS has been deducted, deducted TDS has not been paid to the credit of the central government, 100% of the expenses debited to P&L account should be back. As per 40 small a class 3. 40 small a, look at here, man. Sir, disallowance under 40 small a class 3 is attracted in respect of salary payment of 10 lakh outside India by a company without deduction of tax at source. It will not be allowed as a deduction. You may have a doubt. So this much 40 small a clause 3 is required. Whether I have to recall that section, clauses, subclause. If you are able to, well and good. Instead of 40, if you write 37, John, you are gone. So if that disease is there for you, leave it. Don't write. As per the relevant provisions of the Income Tax Act, all provisions are covered. Okay? If you are pakka perfect, if you are 100% thorough, then use the section number. Don't quote the wrong section number. If you don't quote the section number, 1 mark may reduce. If you, sir, write the wrong section number, 1 mark, not even 1 mark, you will get. Or whatever may be the question. So that based upon your memory power. Payment made in cash, 30,000 to a transporter in a day for carriage of goods carriage. 35,000 is allowed. 48 subsection 3. So the limit of attracting disallowance under 48(3) for payment otherwise than by account pay check, account pay bank draft, electronic clearance system, such other electronic mode as may be prescribed, sir, is 35,000 in case of plying, hiring and leasing of goods carriage. Am I right? Therefore, in the present case, disallowance under 48(3) is not attracted for payment of 30,000 made in cash to a transporter for carriage of goods. Am I right? I'll be doing one more question from this slot, illustration number 6, man, because after that, from illustration number 7 onwards, full-fledged computation questions will start. Before that, every one of you want to have one quick revision of the Pgbp, revise the entire provision of the Pgbp, then we'll start doing the sir P&L related question, man. Then you will be able to appreciate or understand that in a very, very better way. Basically, computational based question we will be moving into. They will be giving P&L account. We have to apply everything into one question. Sir, there, if you are not able to apply the provisions, means you will start crying. Last question from this slot. Examine with reason whether the following statement are true or false. Nam area of the provisions of the Income Tax Act. Case number A. Payment made in respect of business expenditure incurred on 14th February for rupees 25,000 through a crossed check is hit by the provisions of 48 subsection 3. On a particular day, in a single day, to a single person, I made a cash payment of 25,000 through a what check? Just cross check, not account pay check. Will the provisions of 48(3) applicable? Yes, sir. 48(3) subsection disallowance will come true. Am I right, sir? In order to escape the disallowance specified under 48(3), payment in respect of business expenditure ought to have been made through an account pay check. Payment through a crossed check will attract disallowance under 40A subsection 3. Is it a condition precedent to write off in the books of accounts the amount due from debtor to claim deduction of bad debt? Yes. If you want to claim bad debt under 36 subsection 1 class 7, you have to write off the bad debt in the books of accounts. Am I right? True. It is mandatory to write off the amount due from debtor as not receivable in the what of account in order to claim the same as bad debt under 36 subsection 1 class 7. However, where the debt has been taken into account in computing the income of the assessee basis of ICDS notified under 145 subsection 2 without recording the same in the accounts, then such debt shall be allowed in the previous year in which such debt become irrecoverable and shall be deemed that such debt or part thereof has been written off as irrecoverable in the accounts of the said purpose. Already we discussed. Some income has been included in the computation of the total income as per ICDS. That income has not been recorded in the books of accounts because of the accounting standard. Sir, after payment of tax in future year, if he comes to know that that has become bad debt, then I can't write off in the books of accounts. Even if you have not written off in the books of accounts, it will be deemed that you have written off in the books of accounts. Even though you have not written off in the books of accounts, that item can be claimed as a deduction under 36 subsection 1 clause 7. Already we discussed. Pakka, perfect matching. Coming to the next one. Failure to detect tax at source in accordance with the provisions of Chapter 17B. Already said. Chapter 4D are Pgbp. Chapter 17B are TDS. Inter alia from the amount payable to a non-resident, rent or royalty will result in disallowance while computing business income. Where the non-resident payee has not paid the tax. Yes, the statement is what? True. 40A clause 1. Because clause 1 is for non-resident. 1A is for provides the failure to deduct tax at source, rent or royalty payable to non-resident in accordance with the provisions of Chapter 17B will result in disallowance of such expenditure where the non-resident payee has not paid the tax on such income. With this basic application level questions comes to an we are supposed to solve question number 7, question number 8, that and all P&L based question called as computational based question. Right, sir? Generally, I will tell you, man. Generally, I will tell you, the world is like that. Generally, I just want to, sir, address you since I am the tax teacher. Generally, students of CA Inter, CA Final used to say that chapter Pgbp is a lengthy chapter. Who said that Pgbp is not a lengthy chapter? Even I am also saying Pgbp is a lengthy chapter. Sir, lot of provisions are there. Yes, who said that lot of provisions are not there? Lot of provisions are there. Then what efforts we have taken from our side to make it comfortable? That question is arising. Then, my dear lovable students, after reading all this question, your mind is saying that, for example, if you are having a room, your bedroom, you know that, sir, hair oil is somewhere, but the problem is where it is. That's the problem. You are knowing that yes, this provision has been read or heard somewhere, but exactly where it is. For that, you have to clean and make arrangement of the rooms. Without making cleaning and arrangement, am I right? So, my dear lovable students, you are having two options in your life. You can say that Pgbp is lengthy, Pgbp lot of provision, I am not able to recall the Pgbp, I am not able to apply the Pgbp. Sir, like that you can say the same story for some X number of years. For certain students, it is 1 year. Certain students, it is 3 years. Certain students are saying the same story for 5 years. Still, they are saying the same story. The time they are saying the story, if they studied Pgp, it would have been already over. Hello, sir? Okay, sir. Either you can say the same story in your life that Pgp stuff, Pgp stuff, Pgp stuff. That is your personal choice. For me, CA itself is not tough. It's my choice. Hello, sir? For you, if you want, okay, fine, no problem. Sir, that number 2 is the action we have to take. I will tell you, man. There may be, sir, 150 pages of discussion we would have done for the profits and gains of business or profession. Break it. One day you can spend 10 page. From start, one day you study 10 page. That means, sir, 150 divided by 10 comes to, sir, properly 2 weeks you can complete one time the proper study of the what? Pgp. It's not study, proper study. Lifetime settlement. One time you study. Anything, any subject, one time you properly study and you apply. Then you will know that, oh, this is the mistake I'm doing. I'm studying but not properly studying. So this I'm intentionally saying to the virtual students because in face-to-face generally I used to talk. That's why without cutting the recording I'm talking. Because if you are able to spend 2 weeks, nothing, you are not going to study anything new, pa. You are going to revise one day. How many page? Whatever questions are coming in between 10 page, sit and do. All the remaining provisions, you revise, you study, make it thorough. Depreciation, try to recall. Additional depreciation, 5 points. Still there are X number of students who don't know for what are the 5 items not entitled for what? Additional depreciation. When I say they are recognizing, oh, ship or aircraft, second-hand plant and machinery installed in office or place of residence, including guest house, office appliance or road transport vehicle, any plant and machinery for which the entire cost has been allowed as a deduction under any other section of the Act. How much yes you will hear? You should also start talking, then only to your clients, to your articleship, you can say. So what we are doing, we are just overlooking entire things and saying that, 150 page, how I can. Without that 150 page discussion, I have read 6 questions. There are certain questions where 5 to 6 subparts are there. Nearly 20 questions. Any one place we have said that, sorry, this has not been discussed in the regular lecture. No, sir. Everything has been completed. That too exhaustively. Nearly 15 to 20 hours you would have spent with the Pgbp alone, because that is a backbone of the DT. After spending that much time, if you are not taking effort to study now, it will be a national based. To all my face-to-face students, inter-virtual students, I'm requesting you that the day you are hearing this, mark your calendar, 10 pages per day. Within 2 weeks, Pgbp will be in your hand. Properly study. Daily 1 hour you may have to spend. 1.5 hours you may have to spend. That how many page? 10 page. Whatever questions are coming in between, you do it. You do it, sit and do it. Then after, sir, 2 weeks, you will feel that, every provision I am able to appreciate. Every provision I am able to recall. Section numbers I am able to recall. You will be feeling so much comfortable, man. Like that you do. Sir, have a cumulative revision of 30-40 minutes. That is for the purpose of doing the next 5 to 7 questions from the Pgbp. Come back to me. I will be doing, sir, the P&L based question. We will finish it off that, sir. Sir, I'm comfortable, sir, from your heart. Anybody is there? Where is a grand clap? Sir, very, very, very happy morning to all. So we are doing the chapter Profits and Gains of Business or Profession. In that last slot, we have done up to illustration number 6. I'm moving into illustration number 7. If you see in exam, like this only, sir, one question will become for you from Profits and Gains of Business or Profession. Be very thorough with illustration number 7. This is a question which we have to practice, my dear lovable students. Then illustration number 8, a very good question again, a very good question with normal route and the presumptive taxation route. Illustration number 9, again a profit and loss account question, again a very good question. Illustration number 10, a very small question, but 33AB tea, coffee, rubber, rule number 7A, rule number 7B, rule number 8 question. Illustration number 11, normal question only, nothing is there, nothing big is there. Illustration number 12, 40B related question, along with the adjustment of the brought forward business to loss, a very different question from ICI. Illustration number 13, section 35, expenditure on scientific related question. That means, I will tell you one thing, we have studied the chapter Pgbp to solve these questions only. Otherwise, no need to study the chapter Pgbp at all. Ultimately, a student have to fall in this area. Ultimately, a student should become an expert in solving these questions. Sir, if you solve this question, all the provisions of Pgbp will be able to recall. Mr. Sivam, a retail trader of Cochin, gives you the following trading and P&L account for their ended 31st March 2026. My dear lovable students, in exam, like this trading and P&L account will be given. Sir, trading and P&L account for their ended 31/3/2026 because our financial year is 25-26. Am I right, sir? Sales 1 crore 12 lakh 11,500. Closing stock 1 lakh 86,100. Trading account basically 1 crore 13 lakh 97,600. Sales are less than 2 crore. That means assessee is entitled to travel through the presumptive taxation route. Always when a P&L account has been given in the question, first note that what is the amount of sale. If the sale is less than 2 crore, is entitled to travel through the presumptive taxation route. Sir, then you have to note the impurities. For example, income from UTI is an income to be taxed under IFOS. Am I right, sir? Because UTI means Unit Trust of India. You have invested in UTI. That's what you are getting return. So from UTI, you are getting dividend. Always the dividend income should be taxable under the head IFOS. So my dear lovable students, this has been credited to P&L account. Because of crediting this to the P&L account, net profit would have been increased, should not be increased. As a Pgbp adjustment, we have to remove from the Pgbp and include in the IFOS. Salary normally allowed, rent and rates normally allowed, interest on loan normally allowed, depreciation normally allowed, printing and stationery normally allowed, postage and telegram normally allowed, whereas loss on sale of share, short term, this is capital gain related item. Capital gain related item should not be debited to P&L account. Am I right, sir? Other general expenses normally allowed. Fine. Now, call are starting. In the sense means additional information given. It was found that some stocks were omitted to be included in both the opening and closing stock. That means there is mistake in opening stock and closing stock. If there is mistake in opening stock and closing stock, there is mistake in GP, because if closing stock of 18,000 has not been included, sir, the credit side of the trading account would have come down. So my dear lovable students, if closing stock reduces, GP reduces. So I have to add this 18,000. Opening stock 9,000 rupees has not been included, my dear lovable students. That means this 9,000 rupees opening stock should be included. That means I have to reduce the gross profit. Either you can do the net, in the sense means closing stock is higher. So just add back 9,000, because closing stock is 18,000. Opening stock is 9,000. Net effect of 9,000. Just what you are supposed to do is add 9,000. Or you can do separately, add 18,000, reduce 9,000, then also the effect will be same. Salary include 10,000 paid to his brother. As we all know that brother is a related party. Am I right, sir? Which is unreasonable to the extent of 2,000. As per 40A subsection 2, related party transaction. If you make any expenditure to a related party, out of that such expenditure is unreasonable, to that extent we should add it back. That means that 2,000 should be added back as per 40A subsection 2. That's it. The whole amount of printing and stationery was paid in cash in a single day to a single person. We are not supposed to pay cash in excess of 10,000 or 35,000 as the case may be in case of GTA. My dear lovable students, I have to go and check the printing and stationery. When I read it, printing and stationery was looking allowed, but now only I am understanding that that has been paid by cash. So for this 40A subsection 3 provisions will be applicable. The entire 23,200 should be added back. That is not an allowable expenditure as per Pgbp. The depreciation provided in the P&L of rupees 1,05,000 was based on the following information. This is how the depreciation should be calculated. Opening balance of plant and machinery, as we all know that for plant and machinery, 15% is the rate of depreciation. WDV as on 31/3/2025, that means last year WDV, minus DEP of previous year 24/25 is 4,20,000. That means, my dear lovable students, opening WDV. What was the opening WDV? 4,20,000 is the opening WDV. Am I right, sir? Sir, a new plan fall under the same block of depreciation was bought on 1/7/2024 for it will be 25 for rupees 70,000. My dear lovable students, if it is 1/7, is it more than 180 days or less than 180 days? From 1/7, July 1st to 31st of March, more than 180 days, less than 180 days. So add additions, my dear lovable students. 70,000 rupees is the addition. So 4,20 plus 70 means 4,90,000 rupees is the total amount. Am I right, sir? 4,90,000. Since this 4,90,000 rupees asset has been put to use for more than 180 days, we are entitled to claim full rate of depreciation. That is, sir, 15%. A new plant falling under the same block of depreciation was bought on 1/7 for rupees 70,000. Two old plant were sold on 1/10/2025 for rupees 50,000. If you sell any plant, we have to just reduce the sales. Sales is 50,000. Am I right, sir? So 4,90,000 minus 50,000 comes to 4,40,000. And don't see the date of sale. Date of sale is irrelevant in DT. Only date of purchase is relevant in DT. So for this 4,40,000, since it has been acquired more than 180 days, it is entitled for full rate of depreciation. So 4,40,000 into 15% stands for 66,000 should be the ideal depreciation as per section 32. Am I right, sir? But the depreciation debited to P&L account, sir, as per accounts is 1,05,000. Oh my God, extra depreciation has been debited. So we have to add back 1,05,000 and we have to reduce 66,000. Or you can net it, the extra whatever debited to P&L account should be added back. That's what the depreciation adjustment is all about. Rent and rates includes GST liability of 3,400, which has been paid on 7/4/2026. In the sense means our financial year is 25-26. After 31st of March, In April month, sir, we have paid. No problem, because any taxes, duties or cess or fees payable should be paid before filing the return of income under 139 subsection 1. Since it has been paid before due date, no problem are there. No need to add it back. Other general expense include 2000 paid as donation to a public charitable trust. Contribution or donation to public charitable trusts are not business expenditure. Am I right? It's not an operating expenditure, my dear lovable students. It should be added back this 2000, because this 2000 is there inside other general expenses. Other general expenses 7060 is there. So from that 2000 should be added back, and that can be claimed as chapter 6A deduction under 80G. That will be coming at the appropriate time, because we have not studied chapter 6A deduction. You are required to compute the profits and gains of Mr. Shivam under the presumptive taxation under 44AD, which is nothing. 44AD in the sense means take the turnover, apply 8% or 6% as the case may be. And profits and gains as per the regular provisions of the Act, assuming as excise the option of shifting out of the default tax regime. That means, sir, we have to calculate under Pgbp itself two route, under presumptive taxation route and also under the normal provision. When you are calculating the normal provision, keep in mind that he has gone out of the default tax regime. Assume that the whole of the amount of turnover received by account pay check or use of electronic clearing system through bank account during the previous year. That means don't apply 8%, apply just 6%. Whatever provisions you have scatteredly studied then and there is asking in one question. This is how a Pgbp question will be tested in exam. If you are able to solve this question, that's it. Your 14 mark or 15 mark is secured in your pocket, my dear lovable students. Computation of business income of Mr. Shivam. Net profit as per P&L account 50,000. That's what the starting point. If you see, the starting point net profit is 50,000. Am I right, sir? This 50,000 contains a lot of impurities. I'm going to remove that impurity one by one. Add inadmissible expenses or losses. These items and all should not be debited to P&L account, but these has been debited to P&L account. Because of debiting this item to P&L account, net profit has been reduced, should not reduce, should be back. Number one, undervaluation of closing stock. My dear lovable students, I should have considered the stock properly. There is an undervaluation of closing stock. You tell me, if closing stock reduces, credit side of the trading account reduces. That means net gross profit would have reduced. If gross profit is reduced, automatically net profit will also reduce. That's why I have to add back 18,000. Very easy adjustment. Sir, next one. If I am adding back closing stock, at the same time, I should reduce the opening stock also, because there is an undervaluation of what stock? Opening stock, to the extent of, that's what, undervaluation of opening stock 9,000. So closing stock I will add back, and opening stock I will reduce, or I can do net also. Are you all really with me? That's it. Salary paid to brother, my dear lovable students. Question adjustment specifically saying that total salary, out of total salary, 10,000 rupees includes salary paid to brother. Not a problem. Income Tax Act is not against related party. But if you are paying anything over and above the market value, that extra or excess should be added back. Out of that 2,000 is the extra you paid. Just add back that 2,000 as per 40A subsection 2. This much only Pgbp is expecting from us. When you are reading an adjustment, you should be able to track, sir, which section it falls and what adjustment I should be doing. Printing and stationery, my dear lovable students, whole amount of printing and stationery is paid in cash, would be disallowed, since such amount exceed how much, man? 10,000 as per 40A subsection 3. In a single day, to a single person, if you pay more than 10,000, that amount should be back. That means entire 23,200 should be back. The depreciation, what they have debited in the P&L account, in the depreciation, this depreciation of 1,05,000, this has been calculated as per accounts. Put it on dustbin. We have to calculate the depreciation as per Income Tax Act, that is as per section 32. So this is wrong depreciation debited to P&L account. Because of debiting this wrong depreciation, net profit would have come down. To make it correct, I am first adding back this 1,05,000. Then happily, I already calculated depreciation as per section 32. The correct depreciation as per the Income Tax Act comes to 66,000. I will reduce less depreciation of 66,000. We'll attach the working note. I hope that you are able to appreciate. Unnecessarily, sir, other heads expenditure has been debited to what account? Look at here. Sir, loss on sale of share short term, whether it is short term, whether it is long term, that doesn't matter. That is other heads, sir, expenditure has been debited to Pgbp. Because of that, our net profit will get affected. Should be in a back. That's what, man. Short term capital loss on shares, 8,100 I'm adding back. Sir, you tell me, without paying salary, without paying rent, without paying EB, we can't run the business. But without giving donation, we can run the business. Donation we will pay out of the profit. But sir, salary, operating expense and all we are incurring to operate the business. That means donation to public charitable trust is never a business expenditure. If that has been debited to what account? P&L account, it's a wrong debit. It pulls down net profit. Should be in a back, added back. That's what that 2,000. So you will get subtotal of 2,08,300. Less items to be deducted. Opening stock we have already taken care. If you see the credit side of the P&L account, income from UTI is there. Sir, actually that is a dividend income from UTI. That is not Pgbp income. That should not be credited to the P&L account. So because of crediting this income from UTI, the credit side of the P&L account increases. Automatically net profit increases. Should not happen. That's why I'm reducing that 2,400. Am I right? So my dear lovable students, I will be getting business income before depreciation and the matter classification la venum illa. You can write even less depreciation also, you will be getting business income or the correct profits and gains of business or profession. Look, the reported profit is only 50,000. But the correct profit as per the Income Tax Act is 1,30,900. This is what the profit as per the normal route. Computation of business income as per section 44AD. Now, we are going to calculate the Pgbp in the alternate route because we all know that chapter Pgbp classified into 5 categories. Number 1, deduction. Number 2, disallowance. Number 3, procedural aspects. These 3 are one route. Then number 4, presumptive taxation. Which means I will not prepare this add back, this less all stupidity I won't do. Straight away I will take the turnover, man. 1 crore 12 lakh 11,500 is the turnover. Am I right? Since 100% of the receipts has been received by account pay check, account pay bank draft, electronic clearing system or such other electronic mode as may be, this turnover into 6% I will put. Take your calculator. 1 crore 12 lakh 11,500 into 6% comes to 6,72,690 is the presumptive income as per presumptive taxation route. Whereas the total income as per the normal route is 1,30,000 only. Better, very much better. It's better to maintain books of accounts, better to do tax audit under section 44AB because otherwise your presumptive taxation income will be 6,72,000. Able to appreciate? This depreciation actually we separately calculated, man. Opening WDV 4,20,000, add cost 70,000, less sales 50,000. So you will be having the WDV of the block is 4 lakh. Since 100% of the WDV has been put to use for more than 180 days, you are entitled to claim depreciation at the rate of 15%. So no additional depreciation is allowable as is not engaged in the manufacture or production of any article or thing. So we have claimed 66,000 rupees as the sir. Since GST liability has been paid before the due date of filing the return of income under 139 subsection 1, same is deductible. So no add back is required. What is the requirement of the question? You are required to compute the Pgbp under the presumptive taxation. That's it. We calculated his income, which is 6,72,690 is the income under the presumptive taxation route. Clarity? And profits and gains as per the regular provisions of the Act, assuming he has exercised the option of shifting out of the default tax regime. Assume that the whole of the amount of turnover received by account pay check or use of electronic clearing system through bank account during the previous year. That's it, the requirement. They don't want comparison. They don't want conclusion in the sense means which route to go through. If you ask me, it's better to travel through the normal route rather than traveling through the presumptive taxation route. That means you are an assessee, you are entitled or eligible to travel through the presumptive taxation route. But without opting, you are going to travel through the normal route. Then you are compulsory liable to maintain books of accounts under section 44AA, and you are compulsory liable to do tax audit under section 44. That is the only two additional things you are supposed to do. If you are ready to do that, instead of 6 lakh and odd, you can declare 1,30,900. Very comfortable. All the provision clear. This is how Pgbp will be tested in exam. When we look the chapter, it look very gigantic, but that is not the fact. In exam, more than salary chapter, even more than house property chapter, this chapter will help you to score mark. Only thing is single day, single person 48.3, related party 48.2, like that you should be able to place the adjustment with the section. That if you are thorough with the provision, you will be feeling so much comfortable, my dear lovable students. Are you all ready with me? That's it with illustration number 7. Just take 7 to 8 minutes of time. I will solve illustration number 8. You redo that illustration number 7 in your notebook and come back. We will be solving illustration number 8. Sir, very happy morning to all. I believe that you would have done illustration number 7 and I'm moving into illustration number 8. Mr. S is engaged in the business of plying goods carriage. On 1st April 2025, he owns 10 trucks, out of which 6 are heavy goods vehicle. The gross vehicle weight of such goods vehicle is 15,000 kg each. That means totally how many trucks? 10 trucks. Should be classified into 2 category. How much truck? How much truck? 6 truck, 4 truck. 6 trucks are heavy goods vehicle and 4 trucks are other than heavy goods vehicle. What is the weight of this heavy goods vehicle? 15 tons. Am I right? As we all know that if the truck is a heavy goods vehicle, is a ton based taxation. Am I right, sir? That means 1,000 per ton per month or part of the month into, sir, number of tons. For 1 ton, 1,000 rupees. Sir, the weight of the vehicle is 15 ton. The capacity is 15 ton. So 15 into 1,000, 15,000 rupees will be the presumptive income for 1 month. I am proceeding, sir. On 2nd May 2025, he sold one of the heavy goods vehicle and purchased a light goods vehicle on 6th May 2025. Since he has sold only on 2nd May, even for the month of sale, you are liable to pay the presumptive taxation. And sir, since you have purchased on 6th May, from the date of purchases, you are liable to pay the presumptive taxation. This new vehicle could, however, be put to use only on 15th June. That is irrelevant. Date of put to use are relevant only for the normal route. Date of put to use are not relevant for the presumptive taxation route. Compute the total income of Mr. S for the assessment year 26-27, taking note of the following data. As per books of accounts, how much freight he really collected? 12,70,000. In order to get that freight, these expenses and all incurred. So the net profit as per books of accounts are 4,45,000. That means we are supposed to calculate the presumptive income as per 44AE and compare whether it's better to travel through the presumptive taxation route or normal route. So we are going to calculate the presumptive taxation. Are you ready with me? So my dear lovable students, April, sir, for first 1 month, April and May, we will be putting man, because for May month, we have sold the heavy goods vehicle. That means even for that heavy goods vehicle, I am liable to pay presumptive taxation for May month. Total, how many heavy goods vehicle were there with you? So 6 heavy goods vehicle should be classified into 2 categories. Number 1, 5 heavy goods vehicle and 1 heavy goods vehicle. 5 heavy goods vehicle was with you throughout 12 months. That means this was with you for 12 months. Whereas for this 1 heavy goods vehicle was with you for April and May. Sir, I sold May 2nd, sir, but still you are liable to pay presumptive income for April and May because 1,000 per ton per month or part of the month. That means, my dear lovable students, sir, this is for 2 months will be calculated. For 1 month, for 1 heavy goods vehicle, we already calculated that 15,000 is a rate. Am I right? Into 5 heavy goods vehicle. So 12 months into 15,000 means For one heavy goods vehicle, 1,80,000 will be the presumptive income. Into 5 means 9 lakh rupees will be the presumptive income for the whole year for the 5 heavy goods vehicle. Whereas for this one heavy goods vehicle, since you have sold, my dear lovable students, sir, 15,000 per month will be the presumptive income. For how much month? 2 months. So 30,000 will be the presumptive income. So 9 lakh plus 30,000 comes to 9 lakh 30,000 is the total presumptive income for heavy goods vehicle. Coming to other than heavy goods vehicle. Am I right, sir? Sir, actually starting you are having 4 heavy goods other than heavy goods vehicle was there. And again you have purchased 1 heavy goods vehicle. So can I classify one other than heavy goods vehicle? Can I classify like this? Sir, 4 heavy other than heavy goods vehicle was with you throughout 12 months. Whereas 1 other than heavy goods vehicle you have purchased from the month of May. So 11 months it is going to be with you. Sir, as we all know that for other than heavy goods vehicle, 7,500 per month or part of the month. That means 7,500 into 12 means for one other than heavy goods vehicle, presumptive income is 90,000 for 1 year. Like that you are having 4 other than heavy goods vehicle. So 90,000 into 4 comes to 3,60,000 is the presumptive income for other than heavy goods vehicle what you have holded for entire 12 months. Am I right? Whereas for this new heavy goods other than heavy goods vehicle, what you have purchased in the month of May, it was with you only for, that means 7,500 into 11 months comes to 82,500. That means the total presumptive income from other than heavy goods vehicle are 4,42,500. Am I right? So what is the total presumptive income? You are having heavy goods vehicle and other than heavy goods vehicle. For heavy goods vehicle, the income comes to 9,30,000. For other than heavy goods vehicle, the income comes to 4,42,500. Am I right? So 9,30,000 plus 4,42,500 comes to 13,72,500 is the total presumptive income under 44AE. Hello? But if you are traveling through the what route? Normal route. It's only 4,45,000. Better to travel through the normal route. Am I right? So section 44AE would apply in case of Mr. S since he is engaged in the business of plying goods carriage and owns not more than 10 goods carriage at any time during the previous year. This is the provision. Section 44A provides for computation of business income of such assessee on a what basis? Presumptive basis. Income shall be deemed to be 1,000 per ton of gross vehicle weight or unladen weight as the case may be per month or part of the month for each heavy goods vehicle and 7,500 per month or part of the month for each goods carriage other than heavy goods vehicle owned by assessee in his return of income. All provision clear? Mr. S business income calculated by applying the provisions of 44AE is 13,72,500. Am I right, sir? Sir, and his total income would be 14,42,500 because in question other income has been given. 70,000 rupees is other income. So if the assessee is traveling through the presumptive route, 13,72,500 presumptive income plus 70,000 total 14,42,500. Am I right? But my dear lovable students, sir, if you are properly maintaining books of accounts, this much income really the assessee is not earning. The assessee is earning only 4,45,000 plus 70,000, sir, only 5,15,000 rupees is the total income earned by the assessee. That is a real income. If you love to declare the real income, follow this. As per 44AE subsection 7. Mr. S can claim lower profits and gains if he keep and maintain proper books of accounts as per section 44A and gets the same audited and furnish a report of such audit as required under 44. That's it. If he do so, if that guy is ready to maintain books of accounts and ready to do tax audit, then his income from tax purpose from goods carriage will only be what? 4,45,000 instead of this 13,72,500. 13,72,000 are ad hoc numbers given by the government. Every day you are having, sir, savari. then 13,72,500 will be, sir, possible. But my lorry maximum time are in garage only. Then that much freight I can't make. Are you all ready with me? And his total income would be 5,15,000, my dear lovable students. So better to maintain books of accounts and declare an income which is less than the presumptive income. And you have to compulsory liable to do tax audit under section 44 AB. A very good question, illustration number 8. Are you comfortable? They also done the same computation, man, for heavy goods vehicle and other than heavy goods vehicle. For heavy goods vehicle, one vehicle has been sold during the year. It has been sold on 2nd of May. So April and May, for 2 months, you are liable to declare the income. Whereas the other 5 heavy goods vehicle are undisturbed. It was there throughout 12 months. That's why entire 12 months we are calculating the presumptive income. Whereas other than heavy goods vehicle, totally we were having 4 only, but we have purchased 1. That purchase has been happened in the month of May. So from May to March, 11 months are there. Whereas the remaining 4 heavy goods vehicle are undisturbed. It was there with us for the entire 12 months. That's how the income comes to 13,72,500. Comfortable? Actually, question number 7 was a presumptive taxation relating to 44 AD and the normal route. Question number 8 is presumptive taxation relating to 44 AE and the normal route. Sir, just redo this question very quickly and come back to me. I will be solving question number 9 for you. Again, a P&L account related question. There, we will be doing a lot of regular adjustments. Right, sir? Take 5 to 7 minutes of time. Quickly complete and come back, my dear lovable students. We will proceed to question number 9. Sir, very happy morning to all. I believe that you would have retried question number 8 and we are moving into question number 9. A very good question, mark it as important and LDR to revision. Last day revision question. Like this, only a Pgbp expected question will come. Mr. Raju, a manufacturer at Chennai. He is entitled to claim additional depreciation if he is traveling through the optional tax regime. Because under default tax regime, there is no question of what at all. Additional depreciation at all. Gives the following manufacturing account, trading account and P&L account for the year end. Sales, normally no problem. It's closing stock. But look at the sales value. It is more than 2 crore. My dear lovable students, sir, only up to 2 crore presumptive taxation route is there. You can claim up to 3 crore provided the cash receipts and cash payments are within 5% bracket. Am I right? Sir, generally opening stock, no problem. Purchase of raw material, no problem. Manufacturing wages, no problem. GP, generally nothing set, no problem. So by gross profit, dividend from domestic company is an IFOS income, should be removed from the Pgbp and included in the IFOS. Income from agriculture is an exempt income under 10 subsection 1, should be removed from Pgbp and shown it under IFOS as an exempt income. Right, sir? Coming to expense side, administration charges, no problem. SGST penalty, sir, penalty cannot be claimed as a deduction. It's an infraction of law. As per section 37, it will not be allowed it as a deduction. Should be added back. GST paid, sir, we have to check when they have paid the GST, whether beyond filing the return of income or before filing the return of income. General expense, interest to bank, sir, on machinery term loan allowed. Depreciation generally will be as per books of accounts, should be added back, and we calculate the depreciation as per income tax act. This is a, sir, wrong net profit. We have to start the game with the net profit. Following are the further information relating to financial year 25-26. Administration charges include 46,000. Let me ask you a question. What is the total administration charge? 3,26,000. Inside this 3,26,000, 46,000 paid as commission to a brother. Whose brother? Related party. So they are asking whether you know 40A subsection 2 or not. In 40A subsection 2, 100% disallowed or only excessive disallowed? Excess is disallowed. The commission amount at the market rate is 36,000. So out of 46,000, 36,000 are allowed. How much extra you paid? 10,000. So that 10,000 should be added back. That's it. Assessee paid 33,000 in a cash. Sir, in a single day to a single person, you should not pay cash more than 10,000. But up to 35,000 is allowed to GTA, to a transport carrier. Allowed. No problem. This amount is included in manufacturing expenses. No problem at all. Assume that the provisions relating to TDS are not applicable for this payment. If TDS are not applicable, no need to check whether we have deducted TDS or not. That means no adjustment is required for number 2. Are you able to place it? A sum of 4,000 per month was paid as salary to a staff throughout the previous year. That means 4,000 into 12 means 48,000. Am I right? And this has not been recorded in the books of accounts. This has not been recorded in the books of accounts means an expense has not been booked. If this expense has been booked, net profit will come down. So I have to reduce this 48,000 from the net profit. Am I right? Bank term loan interest actually paid up to 31/3 was only 20,000. How much bank loan debited to P&L? 60. Out of 60, only 20,000 has been paid till the end of the financial year. Balance 40 was paid only November. November is a month after due date for filing the return. That means that 40,000 should be enna back as per 43B, because 43B deduction on actual payment basis. We are having listed any tax, duties, cess or fees payable, interest payable to scheduled bank, interest payable to financial institution. So my dear lovable students, any interest has been debited to what account? P&L account. And which has not been paid before filing the return, then that non-paid interest should be in the back. Housing loan principal repaid during the year 50,000. If you repay housing loan, you are entitled to get ATC. And it relates to residential house property acquired by him in 24-25 for self-occupation. That means this is a self-occupied property. For that, you are entitled to claim deduction under NSC ATC. But in order to claim ATC, you should travel through the optional tax regime. Interest on loan was 23,000. Again, IOBC. For self-occupied property, IOBC can be claimed. Housing loan was taken from Canara Bank. No problem. The loan has not been taken from any relative or friend. Since the loan has been taken from a financial institution, you are entitled to claim deduction. These amounts were not dealt with the P&L account given above. That means these are additional information for income from house property chapter. Depreciation allowable under the act to be computed like this. WDV as on 31/3/2025 minus depreciation. That means opening WDV is how much? 11,90,000. So the opening WDV is 11,90,000. Am I right? So my dear lovable students, additions during the year, total 2 lakh. Sir, 2 lakh are more than 180 days. So what is the total addition? 4 lakh. So add additions more than 180 days. How much lakh? 2 lakh. So tell me 11,90,000 plus 2 lakh. 13,90,000. Subtotal. Add additions less than 180 days, because total addition is 4 lakh. In that 4 lakh, my dear lovable students, 2 lakh is more than 180 days and another 2 lakh is. So 13,90,000 plus 2 lakh, 15,90,000. Out of 15,90,000, 13,90,000 into 15% and 2 lakh into 7.5% will be the normal depreciation. Am I right? So 13,90,000 into 15%. 2,08,500 plus 2 lakh into 7.5%. 15,000. So 2,08,500 plus 15,000 comes to 2,20,000. 23,500. 2,23,500. Are you able to appreciate? So my dear lovable students, this 2,23,500 is the right depreciation, which I am talking normal depreciation. This should have been the depreciation debited to what account? P&L account. But in P&L account, you have debited how much lakh? 2 lakh. Sir, less depreciation has been debited. So that 2 lakh should be enna back. And 2,23,500 should be reduced. Am I right, sir? Sir, compute the total income of Mr. Raju for assessment year 26-27, assuming he pays tax under the default tax regime. That means if you are traveling through the default tax regime, there is no concept of additional depreciation. If you are traveling through the default tax regime, there is no question of 24B. If you are traveling through the default tax regime, there is no question of chapter 6A. Hence, you are not entitled to claim ATC. Ignore application of section 14A for disallowance of expenditure in respect of any exempt income. That means based upon Raju question, we are moving into the P&L account. Can we? You tell me, you pick the figures for me. What is the net profit as per P&L account given? 5 lakh. Is that net profit correct net profit or impure net profit? At excess commission paid to brother. Sir, you paying to brother not a problem. But as per the market rate, you should have paid only 36,000. But you paid 46,000. How much extra you paid? So that 10,000 has been debited to P&L account. Because of debiting that 10,000 rupees in the P&L account, net profit would have come down. Should be enna back. That's what that 10,000 we are adding back. Are you all really with me? My dear lovable students, then disallowance under section 40A subsection 3 is not attracted. Because in a single day to a single person, you can make the payment in cash. 10,000 is a general limit. But for GTA, here it is, since the limit for one-time cash payment is 35,000 in respect of payment to transport operator. Therefore, amount of 33,000 paid in cash to a transport carrier will be allowed as a deduction. Am I right, sir? You answer to me, how much total interest on loan debited in P&L account? Out of the 60,000, before filing the return of income, really you have paid only 20,000. That means you have not paid, should be enna back as per section 43B, because deduction on actual payment basis. So bank term loan interest paid after the due date of filing return under 139 subsection 1 should be disallowed as per section 43B. Am I right, sir? Next one, my dear lovable students. State GST penalty paid. Sir, penalty should not be debited to P&L account because penalties are infraction of law. Unnecessarily penalty you have debited to P&L account. Because of debiting that, net profit would have reduced. Should be enna back. Now, depreciation debited to P&L. This depreciation you would have not calculated as per the Income Tax Act. This depreciation you would have calculated as per the books of accounts. Should be enna back. And we have to correctly calculate the depreciation of 2,23,000 and we have to reduce it, man, 2,23,500 depreciation as per the Income Tax Act. Am I right, sir? Now this is a subtotal you are getting. You tell me dividend from domestic company has been unnecessarily credited to the what account? P&L account. Because of crediting this in the P&L account, your net profit would have increased. Should not increase. Remove it, that 15,000. Sir, because of unnecessarily crediting the agriculture income in the P&L account, net profit would have been increased by 1,80,000. Should not be increased. That's why you are supposed to what, man? Reduce it. There was salary to an accountant monthly 4,000 rupees. So 4,000 into 12 comes to 48,000. This has not been recorded. If this has been recorded as an expenditure, net profit would have reduced. Now we are recording it. Salary paid to staff, not recorded in the books of accounts. Assumed it was an erroneous omission. We are assuming that they have, sir, forget to record in the books of accounts. Erroneous omission. And that the assessee has offered what explanation? Satisfactory explanation. Otherwise, section 68, 69, 69A, 69B, 69C, like that sections are there in the coming chapter called as income from other sources. When I teach IFOS, I will tell you what these sections are all about. My dear lovable students, in that one of the section is section 68 is cash credit. There are certain credit in your books of accounts, but you are not able to explain what is the source. Then that will be treated as income. Section 69, unexplained money. 69A, 69, 69B. So if you are not able to explain properly the source, this 48,000 will be treated as income. But here I am assuming that it is a erroneous omission. In such a case, same would be allowed as a deduction while computing the Pgbp. This 68, 69, 69A, 69B, 69C and all will be connected in the chapter IFOS. So don't you worry. Now you have an understanding that 48,000 rupees expense has not been debited to what account? P&L account. If I had debited this now, my net profit would have come down now. I'm reducing it as per Pgbp. So my taxable profits and gains of business or profession is 2,88,500. 2,88,500 is the taxable PGBP. Are you all with me? But the net profit showing is how much lakh? 5 lakh. Wrong net profit. Come on, man. I'm going to calculate the income from house property. You tell me, is the property SOPA, LOPA? SOP. For a SOP, because self-occupied property, they specifically said in the question. If you see, look, housing loan principal repaid for self-occupation. As we all know that the gross annual value for a self-occupied property is nil. Sir, 24B deduction cannot be claimed if the assessee is traveling through the default tax regime. That means basically income from house property will be nil. Under IFOS, sir, dividend from domestic company, the very next chapter will be talking about IFOS. Always the dividend will be taxable under the head what? And you are having agriculture income also. Anyway, it is an exempted income, so they have not shown. Otherwise, you show it less exempt under 10.1. You will be getting gross total income. Sir, you have considered there is no income from salary. Actually, income from house property is nil. You have calculated proper PGBP. There is no capital gain in this question, but you have worked out IFOS also. Except salary and except capital gain, you have worked out the remaining 3 heads of income. That's how you got the gross total income. From the gross total income, deduction under chapter 6A is not allowed since assessee is traveling through the default tax regime. So it will be nil. So the total income of the assessee is only 3,03,500. Am I right? We have already calculated depreciation of 2,23,500 separately. Its working note has been attached. And you have to write separately in the exam that Mr. Raju is paying tax under what tax regime? Additional depreciation under 32 subsection 1 class 2A would not be available to him. Because additional depreciation will be available only under the optional tax regime. Sir, alternative views are also possible. This is what I said, IFOS note. It is possible to take a view that salary paid to staff not recorded in the books is in the nature of unexplained expenditure. Unexplained? Sir, this point will come in the chapter IFOS and hence would be deemed to be income as per section 69C and would be taxable at the rate of 60% under section 115 BBE. For all these sections which I said to you, section 68, section 69, section 69A, section 69B, section 69C, section 69, sir, C and D. Sir, all these sections, if find out by the department in future, is liable to be taxed at a rate of 60%. How much percent? Under section 115 BBE. And against that, you are not entitled to claim any deduction also. Inga we have not gone to IFOS. Here we have assumed that proper explanation has been provided by the assessee so that 48,000 we have claimed it as a deduction. Sir, where the imposition of penalties not for delay in payment of sales tax or VAT or GST, but for contravention of the provision of sales tax or VAT or GST, levy is not compensatory and therefore not deductible. That means any penalty debited to P&L account should be added back. But any interest on delay, that can be allowed it as a reduction. However, if the levy is compensatory in nature, sir, if you have paid interest now, it is compensatory in nature. Interest will be allowed as a deduction, whereas penalty cannot be debited to P&L. It will be fully allowable. Where it is a composite levy, the portion which is compensatory is allowable and portion which is penal is to be disallowed. In the sense means I paid 10,000 which include penalty and interest. Penalty is 8,000 and interest is 2,000. Penalty 8,000 should be added back, whereas 2,000 should not be added back. Since the question only mentioned GST penalty paid and reason for penalty is not given, it has been assumed that the levy is not compensatory and therefore not deductible. Sir, any penalty debited to P&L account should be added back. It is, however, possible to assume that such levy is what in nature? Compensatory in nature. If it is compensatory in nature, penalty will not be added back. If it is contravention in nature, should be added back. Simple. Just think. I have not followed the provisions of the act. Because of that, I am paying penalty. Should be added back. it is not an allowable deduction. Whereas there is a delay in payment of tax, for that I am paying some interest. It is only compensatory in nature. That interest can be claimed as a deduction and hence allowed as a deduction. In such a case, the revised total income has been given 3,94,500. Are you all with me? A very good question from Pgbp. Sir, they are testing even IFOS, even IFHP also. The highlight of this question is assessee decided to travel through above the question or nearby question. You can write that under default tax regime, no additional depreciation. Therinja point now. Sir, under default tax regime, no section 24B. Already we know. Under default tax regime, no chapter 6A deductions. Am I right? These are the highlights of this question. Because if you claim additional depreciation, your answer will go wrong. If you claim 24B, your answer will go wrong. If you claim chapter 6A 80C, your answer will go wrong. If an assessee travel through default tax regime, these and all not allowed. If an assessee travel through optional tax regime, additional depreciation can be claimed. 24B can be claimed. Chapter 6A can be claimed. Are you all really with me? This is what a beautiful question according to me. Now you tell me which section, how much, what you will do. Your starting point will be net profit as per P&L. How much lakh? Calculator take. 5 lakh rupees, everyone type. Okay, I'm going to do the Pgbp in calculator. Net profit as per P&L 5 lakh. Sir, in the profit and loss account debit side, total 46,000 commission has been debited. In that, the market rate is only what? 36,000. How much extra? Should be NA back. Add 10,000. So 5 lakh has become 5 lakh 10,000. Sir, in the P&L account, I paid 33,000 rupees cash, but to a GTA. Any problem? No adjustment is required. Leave that. A sum of 4,000 per month. Sir, 4,000 into 12 comes to 48,000. Has been paid as salary to a staff, but it has not been recorded. You are having two options. Either you can say that this is a mistake happened in accounts. If it is a mistake, it can be claimed as a deduction under Pgbp. Or you can say that this is an unexplained expenditure under IFOS. So under section 69C will be applicable. You want what? Which chapter you are learning? So take it as Pgbp adjustment. That means this 48,000 has not been recorded in the debit side of the P&L. If this has been recorded, net profit would have come down. So minus 48,000. Are you with me? Bank term loan. You tell me how much total bank term loan debited to P&L? 60,000. Out of that, how much has been paid before filing the return? 20,000. That means remaining 40,000 just debited to P&L account but has not been paid before filing the return. As per what section? 43B. That 40,000 should be added back because section 43B is saying that deduction on actual payment basis. How much you have not actually paid? So plus 40,000. As per what section, man? 43B. Am I right? Housing loan, my dear lovable students. Housing loan means Pgbp illa IFHP. IFHP. The house is a self-occupied property. Am I right? Generally for a SOAP, GAV nil. LT bar MT not applicable. NAV nil. 30% of NAV not applicable. Only allowed is 24B. But in order to enjoy 24B, you should travel through optional tax regime. Since the assessee is traveling through default tax regime, there is no question of self-occupied property concept at all. That means leave adjustment number 5. Am I right? Sir, wrong depreciation has been debited to P&L account. Should be NA back plus. What is the depreciation debited? 2 lakh. So plus 2 lakh. We have calculated the correct depreciation in our working note. 2,23,500 is the correct depreciation. So 2,23,500 comes to 4,78,500. Are you getting this in calculator? Super, sir. 4,78,500. And since the assessee is traveling through default tax regime, when you are calculating depreciation, please don't calculate additional depreciation. That's it. These are the adjustments generally in the adjustments, but penalty is nowhere mentioned. We have to, sir, go the P&L and add back. How much rupees, man? So plus 5,000, sir, 4,83,500. This is nowhere mentioned in the adjustment. We have to remove dividend 15,000 and we have to remove 1,80,000. I believe all the Pgbp adjustments we have taken care. The answer in the calculator, what you are getting is, look at here, 2,88,500. Easy, perfect. Sir, I'm doing the same question to get the control, because if you are able to handle this, that's it, Pgbp done. You just think, we already done earlier 1 or 2 questions. Repeated adjustments are coming. That's what Pgbp is all about. 48.2 will be their mandatory. 48.3 will be their mandatory. Sir, unnecessary other hits income will be credited to what account? P&L account. They will be wrongly calculate the depreciation. Cash payment exceeding 10,000 would have been given. TDS non-payment 30%, 100% disallowance would have been given. So, if you redo these questions properly once or twice, you will get the idea of how to deal the chapter profits and gains of business or profession. With that, we can declare that we are done with illustration number 9. Comfortable? Sir, just take 10 to 12 minutes of time, redo that question and tally by your own, and come back to me. We'll be solving illustration number 10. Sir, very happy morning to all. So we are doing the book back questions of the Pgbp. In that, up to question number 9, we have solved. We can move into question number 10. Very easy question. Question number 10, we can knock it off. Question number 11, we can knock it off. Question number 10. Mr. T is engaged in composite business of growing and curing means further processing of coffee in Coorg, Karnataka. My dear lovable students, is Karnataka is in India? Yes, sir. That means coffee has been grown and cured in India. We all know that 2 types of coffee are there, normal coffee and abnormal coffee. Just grown and cured na normal coffee, grown, cured, grounded, roasted, boosted, Horlicks, abnormal coffee. Commerciality will be more. Am I right? Whole of the coffee grown in his plantation is cured. 100% curing they are making. Relevant information pertaining to the year ended 31/3/2026 are given below. Opening balance of a car, that was the only asset in the block as on 1/4/2025. That is WDV as on 2025 minus depreciation. That means the opening WDV is how much lakh? 3 lakh. For this car, we are supposed to provide depreciation. Opening balance of machinery as on 1/4/2025, WDV as on 31/3/2025 minus depreciation 15 lakh. So this guy was using machinery also. My dear lovable students, for machinery, you are supposed to calculate the depreciation. So for car, we have to calculate depreciation. For machinery also, we have to calculate the depreciation. Expense for growing coffee. Sir, once you ground the coffee only, you can cure the coffee. Am I right, sir? So 3,10,000 is the expenses for growing coffee. Expenditure for curing the coffee, 3 lakh. So by doing both the things, you will sell the coffee for how much lakh? 22 lakh. So from 22 lakhs income, I have to reduce the expense. 2 expense mainly we will incur. One is to grow the coffee and other is to cure the coffee. Besides being used for agriculture operation, car is also used for what use? Personal use. Section 38, asset used for both business and personal. Then the proportionate expenditure relating to business only will be allowed as a reduction. Personal will not be allowed as a reduction. Disallowance at personal use may be taken at. So 20% of the car expenses, 20% of the depreciation, 20% all the expense relating to car will not be allowed as a deduction. The expenses incurred for car running and maintenance are 50,000. So you can't claim entire 50,000 because out of 50,000, 20% is for personal in nature. Only 80% will be allowed as a. Whereas the machines were used in coffee curing business operations only. That means 100% of the machine are used for coffee. Compute the income arising from the above activities for the assessment year 26-27. Easy question, man. Very easy question. Just throw the figures what I'm asking. Within 5 minutes, we can complete this question. Tell me what is the sale value of the cured coffee. What is the income? That's what the first one, sale value. You tell me without growing, can you cure the coffee? So the first, we will tabulate all the expenditure relating to growing the coffee. Sir, for growing the coffee, they themselves said that 3,10,000 is the expenditure they have incurred. Am I right? So expenditure for growing coffee, 3,10,000. Sir, even car is also part and parcel of growing and curing. So for car, you have incurred an expenditure of 50,000. But don't think that entire 50,000 can be claimed as a reduction because asset used for both business and. So out of 50,000, only 80% expenditure can be claimed as a reduction. So 50,000 into 80%, 40,000 is the deduction. Are you all really with me? Even for the car, we have to calculate depreciation. Tell me what is the WDV of the car? 3 lakh. For that 3 lakh into 15% because it was there from first. You are entitled to claim full rate of depreciation. Comes to, but entire 45,000 cannot be claimed as deduction because car has been used for both personal and official. So 45,000 into 80% comes to only 36,000 depreciation can be claimed. That's what 36,000. So the total cost of agricultural operation. Look, 3,10,000 is for growing coffee. Car has been used not for curing, for the purpose of what? Growing. So 3,10,000 plus 40 plus 36,000 comes to 3,86,000 is the total expenditure attributable for growing coffee. But they are not only doing growing, but also they are doing curing. So expenditure for curing the coffee, they themselves given that how much? 3 lakh. Now for growing, I don't want plant and machinery. For curing only, I want plant and machinery. For this plant and machinery, 15 lakh, you are entitled to claim depreciation at the rate of 15%. So 15 lakh into 15%. So my dear lovable students, sir, opening is how much, man? Sorry, expenses is how much, man? 3 lakh. At depreciation of machinery is 2,25,000. These are the two expenditure they have incurred for curing the coffee. So 3 lakh plus 2,25,000 na 5,25,000 rupees is the total cost of curing the coffee. Up calculator, growing coffee 3,86,000 plus curing coffee 5,25,000. Total comes to 9,11,000. This 9,11,000 should be bifurcated as per rule number 7B. We are having rule number 7A applicable to rubber. Rule number 7B applicable to coffee. Rule number 8 applicable to tea. Rule number 7B normal coffee, abnormal coffee. And in this question, it is a normal coffee. The rate for normal coffee is 75-25. Am I right, sir? 75% are agriculture income and 25% are. So classify this 12,89,000 into 75%. 9,66,750 is the agricultural income. And 3,22,250 into 25%. Sir, sorry. 12,89,000 into 25% comes to 3,22,250 is the what income? Only to that extent it will be taxable under Pgbp. This agriculture income will be fully exempted. Come to the depreciation. We already calculated. What is the WDV of car? Total how much lakh? 3 lakh. Since a car was there from 1st of April, you are entitled to claim 15% depreciation, which comes to 45,000. But 45,000 cannot be claimed as a deduction because car has been used for both business and personal. That means, my dear lovable students, since the car, 20% of the car has been used for personal, 9,000 depreciation will not be allowed as a deduction. Only 36,000 depreciation will be actually allowed. Am I right? Whereas, my dear lovable students, machinery, the opening value is how much? 15 lakh. Since 100% of the machinery you are using for business, you are entitled for the entire 2,25,000 as depreciation. This has been claimed both. Whereas cars depreciation has been treated as cost of dash coffee, growing coffee. Right, sir? Whereas, sir, depreciation of the machinery has been treated as a part of cost of curing coffee. Are you all really with me? Yes, sir. That's it. This note, you can read it, man. Both the notes, very easy only. Look at here. Where an assessee is engaged in composite business. What is composite business? Tea, coffee, rubber. Of growing and curing of coffee, income will be segregated between agriculture income and business income as per rule number 7B of the income tax rules. As per the above rule, income derived from sale of coffee grown, cured by seller in India shall be computed as if it were income derived from business, and 25% of such income shall be deemed to be the total income to tax. The balance 75% will be treated as agriculture income. They have just written the provision. Then, my dear lovable students, explanation 7 to section 43 subsection 6 provide that in case of composite income, the purpose of computing WDV of asset acquired before the previous year, total amount of depreciation shall be computed as if the entire composite income of the assessee, and not just how much percent, is chargeable under the head Pgbp. In the sense means what they are trying to say is, when you are calculating depreciation, don't have 75-25% classification and all. Sir, calculate the depreciation 100%. In the sense means, if you see the answer now, I have claimed here 100% depreciation. So don't say that 80%. Sir, that 80% is the 100% for the Pgbp. And here I have claimed, sir, entire 2,25,000. That means when I claim depreciation, I will not apply rule number 7A, 7B, rule number 8 and all. After I claim the depreciation only, I have to apply rules. So the depreciation so computed shall be deemed to have been what allowed? Actually allowed to the assessee. That means that depreciation you can claim. Very normal question, man. You tell me, compute the depreciation allowed on this asset. 1, 2, 3. For these 3 assets, how much depreciation you will get? Straightforward 1 minute question. Mr. Prem has following asset under for the used for business purpose. A machine costing how much lakh? 4 lakh. Which was used for what research? Scientific research, and deduction under 35 was allowed and claimed. Sir, if you claim deduction under section 35, then my dear lovable students, depreciation under section 32 will be 0. No depreciation at all, because 100% of the cost you would have claimed it as a. So depreciation on machinery used for scientific research, actual cost is nil. As rupees 4 lakh being the actual cost, being a deduction allowed and claimed under what section? 35. Since already 100% of the cost you have claimed it as a deduction, there is no amount is there to claim the super. A laptop received as gift from his friend costing rupees 60,000. It was purchased on 1/4/2024 by his friend. Sir, sometimes we may receive asset as gift or will or inheritance. Then cost of acquisition is cost to the previous owner. Even in Pgbp also. So my dear lovable students, in the hands of me, 60,000 will be the cost. What is the rate of depreciation for laptop? 40%. 60,000 into 40%, 36,000. 24, 24,000, right? 24,000, yes, sir. Sir, look at here, sir. Laptop received as gift from his friend costing 60. It was purchased on 1/4/2024 by his friend. Friend purchased on 1/4. Depreciation on laptop received as gift at 40% will be 36,000, because 60,000 is the real cost. So 60,000 into 40% na 24,000. 24,000. Yes, sir. My dear lovable students, sir, cost is cost to the previous owner. When the friend has purchased 1/4/2024, that means 24/25 friend purchased. What is the cost? 60,000. Then what is the depreciation for that computer for the last year? 24. So 60,000 minus 24,000. Okay. On that 36,000, if you apply 40%, what will be the depreciation for the current year? 14,400. Because date is important, man. They have given not our date, man. 25. They have given 24. So that's what they are saying. Depreciation on laptop received as gifted 40% on 36,000. Rupees 60,000 being the actual cost to the what owner. Minus 24,000 being depreciation for the previous year, 24/25 allowable to the assessee if it was the only asset. That means from the cost, you have to reduce the last year depreciation. Then you will get the opening WDV. Apply 40% on opening WDV. A temporary wooden structure, sir, as we all know that building generally 5% or 10%. But temporary structure 40%, costing 70,000 erected in December 2025. So 70,000 into, tell me, 40% into Sir, December 2025 means less than 180 days into 50% comes to only 14,000. Can we claim it as a? So depreciation on temporary wooden structure at 40% into 50% on 70,000. Since it is put to use for less than 180 days, total depreciation is 28,400. Am I right, sir? Can we do the last question from the entire profit? Last two questions from the entire profits and gains of business or profession. AB Light LLP consists of two working partners. How many people? Two working partners. Mr. Anand and Mr. Beam with 60% and 40% share respectively. So in that LLP, two partners are there. One person is having 60%, other person is having 40%. As per the partnership deed, they are eligible for interest on capital at how much percent per annum? But the allowed rate is only 12%. Am I right? On their capital contribution of rupees 15 lakhs each and remuneration of how much per month? 50,000 per month to whom? Anand. And 40,000 per month to Beam. But we are having a limit, first 6 lakhs unbalanced. Are you remembering? The firm is engaged in manufacturing business. Fine, sir. They are entitled for additional depreciation if they are traveling through the optional tax regime. During the year ended 31/3/2026, net profit as per P&L was 25,86,000 before considering interest on capital. Super. That means they have not provided interest on capital. We can provide proper interest on capital and remuneration to partners as well. The following item. Sir, in addition to that, sir, this is the net profit, 25,86,000. They have not provided interest on capital. They have not provided remuneration, and these items are all not taken care. Current year revenue expenditure on scientific research is 2,40,000. You can claim this. Unabsorbed capital expenditure on scientific research relating to previous year, you can knock off. Unabsorbed depreciation, you can reduce it. Current year depreciation, first you have to reduce it. Brought forward business loss. Sir, before unabsorbed depreciation, give priority to the brought forward business loss. Current year capital expenditure on scientific research, 3,45,000. You are required to compute the book profit and remuneration allowable in the hands of AB Light LLP for assessment year 26-27. Also determine the amount of remuneration taxable in the hands of Mr. Anand and Mr. Beam. A particular question from 40B. If you see all the book back, actually one question is handling one area. Presumptive taxation of 44AE, presumptive taxation of 44AD. Then they are talking about, sir, the other areas. So, if you thorough this book back question itself, it will be equal to revising the entire Pgbp. Am I right? What is the net profit as per P&L account? 25,86,000. Already given in the question. I'm starting with the net profit given, man. 25,86,000. Can we start doing? Is this net profit after interest on capital, before interest on capital? Before interest on capital. So I have to reduce the interest on capital. How much interest on capital allowed? 12% as per section 40B. Am I right? What is the capital eligible? 15 lakh. Already given in the question. Look at here. Remuneration to partners as well. Here. During the year ended, net profit as per P&L account is 25,86,000. But they are entitled for 15% per annum of rupees how much each? 15 lakhs each. Are you all really with me? So I am going to calculate the interest on capital not at 15%, but at, so calculator, man, 15 lakh into 12% means 1,80,000 is the interest on capital for one partner. Am I right? Into 2, 3,60,000 is the interest, total interest on capital allowed. Am I right? Sir, I have to calculate the book profit. Book profit means profit after interest on capital, but before remuneration to partners. Because I'm going to calculate remuneration to partner based upon the what profit? Book profit. So where and all current is there, all things has to be reduced. Because when I reduce the current year only, current year profit I will get. Correct? On current year profit only I can pay you remuneration. Profit how I can pay remuneration? Sir, so current year revenue expenditure on scientific research can be reduced. Current year depreciation can be reduced. Current year capital expenditure can be reduced. Unabsorbed depreciation of the earlier year also can be reduced, because unabsorbed depreciation should be treated as current year depreciation. Already when I explained section 32, I have highlighted. So I have reduced all the current year item. And unabsorbed capital expenditure on what research? Scientific research. Also, I have reduced. My dear lovable students, sir, 85,000. Because unabsorbed scientific research expenditure should be treated in line with unabsorbed depreciation rule. So, all the expenditure I have reduced, I will be getting book profit. I will be getting what profit? So 10,34,000 is the what profit? Book profit. But when I calculate book profit, I have not reduced business loss. I have not reduced actual remuneration paid, because book profit means profit after interest on capital, but before remuneration to partner, which has to be calculated as per the provisions of chapter 4D. Chapter 4D means Pgbp. In Pgbp, all these should be allowed as a deduction. That's why when I calculating the book profit, I am reducing all these things. Are you all really with me? Come on, man. Sir, book profit brought forward business loss of assessment year 21-22 is not allowed to set off while computing what profit? Because that is not as per chapter 4D. That is not as per Pgbp. That I have to do as per the set off and carry forward provisions. And remuneration actually paid or payable to working partner cannot be claimed as deduction in book profit, because in the whatever profit I am getting from that profit only I can pay what? Remuneration. Then how I can reduce remuneration? If I reduce remuneration, then what I will calculate? Are you understanding? So my dear lovable students, this is the partner's remuneration allowable under section 40B on the first 6 lakh and the balance. What is the book profit? 10,34,000 should be classified into first 6 lakh balance. First 6 lakh, 90% of the 6 lakh or statute limit of 1,50,000, whichever is higher. So 6 lakh into 90% na 5,40,000 rupees is the amount of remuneration allowed. On the balance 4,34,000, how much percent? 60%. So 4,34,000 into 60% comes to 2,60,400. So the partner's remuneration allowable under 40B maximum is how much lakh? 8,400,000. Am I right, sir? 8,400,000. That means from this book profit of 10,34,000 less remuneration to partner, 8,400,000 will be the taxable income in the hands of LLP. Am I right? Because when you calculate this 10,34,000, you have not reduced the remuneration to partners. Clarity, pa? Hence, the allowable working partner in the hands of AB Light LLP for assessment year 26-27 is 8,400,000. Clarity? Remuneration taxable in the hands of Mr. Anand as business income. Now, this amount of 8,400,000 can be claimed as a deduction in the hands of partnership firm. It's an expense for the partnership firm or LLP. Since it is an expense, it is an income for the partner. Sir, these two partners are only getting 8,400,000 rupees from the partnership firm. Partnership firm will claim it as a deduction. Now it has to be taxed as an income in the hands of the partner. So my dear lovable students, 8,400,000 is the total remuneration. 8,400,000 is the out of total remuneration. What is the remuneration allowed as per partnership deed? For first guy, 50,000 into 12 na 6 lakh. For the second guy, 40,000 into 12 na 4,80,000. So as per partnership deed, total 10,80,000 remuneration is allowed. In the same proportion, I have to calculate. What is the total remuneration as per Income Tax Act? 8,400,000. Am I right? What is the remuneration as per partnership deed for the first partner? 6 lakhs. Divided by what is the total remuneration allowed as per partnership deed? So calculator man, 8,400,000 into 6 lakhs divided by 10,80,000 comes to 4,44,667 rupees should be taxable in the hands of the first partner under the head profits and gains of business or profession. Are you all really with me? The remaining income, which is what? 8,400,000 into 4,80,000 divided by 10,80,000 na 3,55,733 should be treated as income in the hands of Mr. Beam as profits and gains of business or profession. Are you understanding the question? This is a newly added question in the study material for May examination. This question was old, it is not there. So from 40B area, they may test it like this is an LDR expected question. In the sense means, we will recall man. What is a net profit as per P&L? 25,86,000. Is this 25,86,000 after interest on capital or before interest on capital? Before interest on capital. So reduce interest on capital. What is the capital amount? 15 lakhs per partner. How many partner? 2 partner. As per Income Tax Act, how much percentage interest is allowed? So 15 lakh into 12%. For one partner, how much interest is allowed? 1,80,000. Like that, how many partner? Into 2 comes to minus 3,60,000. You will be getting 22,26,000. Am I right? Sir, for the purpose of computing book profit, will you reduce remuneration to partner? You won't reduce. You won't reduce because based upon book profit only I will be calculating remuneration. Then eppadi na minus panna mudiyum? Now I'm going to calculate the book profit. What is book profit? Book profit na book profit means profit as per chapter 4D. Chapter 4D means Pgbp. So whatever you want to reduce, you reduce it. For example, as per Pgbp provision, current year revenue expenditure, current year expense should be reduced. Yes, sir. As per Pgbp, current year expense 2,40,000. If you reduce only, you will get the net profit. Am I right? Sir, as per Pgbp, unabsorbed capital expenditure on scientific research will be treated as current year depreciation. So you have to reduce that 85,000 rupees also. Am I right? As per Pgbp, unabsorbed depreciation will be treated as current year depreciation. Because of that reason, 52,000 should also be reduced. Am I right? Sir, as per Pgbp, current year depreciation mandatorily has to be reduced. So I have to reduce 4,70,000 rupees also. Are you able to appreciate? Sir, brought forward business loss, sir, is not as per Pgbp, is as per set off and carry forward chapter. Current year capital expenditure on scientific research. It's current year expenditure. As per section 35, current year capital expenditure on scientific research, 3,45,000 should be reduced. That means you will be getting an answer of 10,34,000 rupees as the what profit, book profit. That 10,34,000 should be bifurcated into 2 category. Number 1, first 6 lakh and the balance. On first 6 lakh, sir, 90% of 6 lakh or statute limit of 1,50,000, whichever is higher. And on the balance, 60% you have to apply. That will be the maximum remuneration. 8,400,000 is the maximum remuneration you are supposed to be paid. Am I right, sir? Sir, now that 8,400,000 will be allowed as a deduction in the hands of the LLP. Whereas that 8,400,000 will be taxable in the hands of the partner under the head profits and gains of business. Or the last question, really, we are moving. Just we knock it off, man. Very simple question only. Mr. Piyush runs a sole proprietary firm and owns 4 machines which was put to use for business in March 2025. How many machines he was having? 4 machines. Depreciation on these machines is charged at 15%. The WDV of this machine starting how much opening? 2 of the old machine were sold on 12th July. That means opening 7,70,000 was there. So 7,70,000 opening value for how many machine? 4 machine. Less sale. How many machines sold? 2 machine. Before that, I have to check is there any purchase or not. A second-hand plant was brought for 6,10,000 on 30th of what? December. So we have to add the purchase first, then also we should reduce. And the addition is second-hand, not entitled for additional depreciation. So calculator, what is the starting opening? 7,70,000 plus purchase 6,10,000. So total 13,80,000. Am I right? Minus sale 10 lakh. So still 3,80,000 rupees value is there. You are entitled to claim depreciation under section 32. Section 50 will not be applicable because block does not cease to exist. Further, Mr. Piyush has furnished the following particulars relating to payment made and expenditure incurred towards scientific research for the year under 31/3/2026. Payment made to UV University, approved university rupees 15 if you are contributing to an outsider. If you travel through the optional tax regime, you are entitled to claim 100% deduction. Am I right? Payment made to Satyavati College 17. Compute the following for assessment year 26-27. Claim of depreciation. Can we calculate the depreciation? What is opening WDV? 7,70,000. It comprises of how many machine? Okay, 4 machine. Add purchase of second hand machine. How many machine you purchase? So for the 5 machine, 13,80,000. How many machines you sold? 2 machines you sold with a value of 10 lakh. So still you are having, his asset is there? Yes, sir. His value is there. Then for this 3,80,000, we are supposed to provide the depreciation. We will mandatorily assume FIFO method first in. That means, sir, we are having the newly purchased machine in our hand when we have purchased December 2025. December, na January, February, March. Only 3 months are there, which is less than. So 3,80,000 into 7.5% comes to 28,500 will be the amount of depreciation. Are you comfortable? That's what note they have given. First part of the answer comes to an end. Since value of the block as on 31/3/2026 represent part of actual cost of second hand plant purchased in December, which has put to use for less than how many days? Depreciation should be restricted to 50% of the prescribed percentage of 15%. That is, depreciation is restricted to. Therefore, depreciation allowable for the year will be 28,500. Comfortable? Come to payment to scientific research. Have you contributed to UV University, an approved university? Sir, as per section 35, subsection 1, clause 2, if you are contributing for scientific research, you are entitled to claim 100% deduction. Am I right? Sir, Satyavadi College, some college you have contributed. It is not mentioned as an approved university. Look at the question. They said that, look, payment to university, a dash university. Since the university is approved, you are entitled to claim deduction under section 35. Whereas payment to Satyavadi College, nothing said regarding the approval. You are not entitled to claim deduction under section 35. So the total deduction under section 35 is 15 lakh. With this, all the book back questions of the chapter profits and gains of business or profession comes to an. We have done with the chapter man, chapter Pgbp.